This is Bloomberg Surveillance with Tom Keene and Paul Sweeney.
Donald Trump needs a weak dollar.
Have we achieved a soft landing? Has the Fed kind of done its job?
With Lisa Mateo on markets.
The economic calendar jam-packed today.
And Michael Barr with news.
Fears over a broader regional war in the Middle East.
The best in economics, finance, investment, and international relations. This is Bloomberg Surveillance on Bloomberg Radio.
Good morning, everyone. Tom Keene, Paul Sweeney, Lisa Mateo, Michael Barr. We say good morning to you. An exhausting week. The news flow, Nathan nailed it. It's like a fire hose.
Yes,
exactly. Of news this morning.
Seems like it's been all week.
Can we just talk a little bit here about some of the glow forward? Mary Schlangenstein, who's been around the block a few times on airlines. Delta Air, international revenue up 6%. Premium revenue, that's where Sweeney sits, up 6%. American Express card partner up 14% in revenue. It's a really rosy outlook.
It is. Business travelers, they cited them as some strength there. I'm hopping on a plane Sunday, and I'm guaranteeing there'll be not one seat empty.
Yeah. Remember, it used to be 74% capacity. Now it's not even 94%.
So people are back, and they got to get some planes back in the air, I think.
Just to blur this, all sorts of stories. We're not going to bore you with just the news flow right now. Just extraordinary. And, of course, with important updates in the fire, Rob Carolyn will join us with his wonderful work on a quieter Santa Ana win this morning. It is Jobs Day. Claudia, Sahm, and Ellen Zenter at 8:30 this morning. From the Interactive Broker Studios, our Bloomberg Business Flash, Lisa Mateo.
And we've got futures mix. This is ahead of U.S. payrolls data. Like you said, we have NASDAQ futures down 0.2%, 45 points. Dow futures little changed, up 22. S&P futures down about 0.1% or 11 points. The 2-year yield, 4.29%. That's up 2 basis points. The yield on the 10-year, 4.69%, and that is little changed. To currencies, the Bloomberg Dollar Spot Index, little changed. Japanese yen, stronger. Euro, stronger. British pound, weaker. It's now at 123.02 against the dollar. Shares of NVIDIA, they're down 0.5%. The company criticizes those new chip export restrictions that are expected to be announced soon by the Biden administration. Other chip stocks, Advanced Micro Devices, down 1.5%. What is up? That shares of TSMC, Taiwan Semiconductor, their ADRs up about 1.5%. Quarterly sales beat estimates. Then we go to Delta, up 5%. You talked about it, topping earnings on demand for overseas travel. We're awaiting earnings today from Walgreens and Constellation Brands, but we'll end with this headline. Constellation Energy, they confirm it'll buy Calpine for $16.4 billion in a cash and stock deal. That is your Bloomberg Business Flash. Paul and Tom.
Lisa, thanks so much. Greatly appreciate that. All sorts of stuff going out there, and different news flow in that. We're going to try to stay on script this morning here, and we do that by starting with the equity markets. Paul, I would suggest there's a fair amount of gloom out there.
Yeah, we had the equity markets.
Institutional gloom.
Well, it's interesting. We had such, 23, 24. You had mid 20% returns in the S&P 500.
Can't happen again.
Can it happen? I don't know. What do we do in 2025? So let's talk to some smart people, Tom, like Sarah Hunt. She's a partner and chief market strategist at Alpine Saxon Woods. Sarah joins us here in our Bloomberg Interactive Broker Studio. Sarah, after 2 years of just extraordinary returns for the S&P 500, how do you position for 2025?
Well, good morning, and thank you for having me. I think that's the biggest question on everybody's minds, because you look at those returns and you think the odds of that happening a third time are probably not that high. You also look at the volatility and think the odds of getting more volatility this year are quite a bit higher, given that you've got a change in administration and where interest rates are. And I think you position yourself, you can't get away from the big tech giants, because those are cash flowing tremendously, and there is a lot of growth and there's a story there. But I think you also have to be very careful underneath what else you put in the portfolio, very careful of cash flows, balance sheets, and what you think is a good outlook thematically. Are people given that over diversified? Peter Lynch called it diversification. Is it just too much spread out when there's only going to be a select group of winners based on, say, free cash flow? So that's where looking for what is happening on the economic front thematically, so that I'm looking at different sectors, but I'm looking at them because they have something in common, which is I've got a theme that's coming along. So the growth in technology centers, there's a lot of ancillary companies. They're not just the big tech stocks for that. you have to look at all the areas. You can't just diversify to say that I have enough different sectors. You really need to be wondering why you would be in a specific
why
stock.
You're diversifying.
In a specific sector, absolutely.
Paul, I can't describe how important I think this is.
Right. Sarah, I mean, we've got, I think, December, January, rates kind of moved higher. Maybe I think surprised people how rates have moved higher, stayed higher. It now seems like it's higher for longer. How much of a headwind is that for the equity market?
I think it's initially a sort of shock to the system because I don't think the expectation was that the long end was going to move as fast and as far as it did. I think the question is where it goes now. The payrolls number this morning is obviously going to be very important to that. I don't think that equities on the face of it like higher rates to start with, but once they adjust to them, I think that they can manage through that. And to Tom's point earlier, why are rates going higher? Is it for good reasons or bad reasons? And that also matters to the equity markets.
Into the earnings season now, like today's jobs report, Michael McKee says the variance, folks, from the low number, I'm going to say Jan Hatzius to Goldman Sachs, out to a very high number, I'm going to suggest Anna Wong, Dr. Wong at Bloomberg Economics. Huge spread. Do we have the same tone in the earnings space, Sarah Hunt?
I think we do right now, and I think that's part of the issue because we always start off with a very optimistic look towards forward earnings early in the year. And then as the year goes on, those are adjusted. And generally speaking, they are adjusted down unless you're coming out of some sort of bad economic situation where they can adjust earnings up. So I think the question is going to be, how do all these things interplay with one another and what happens from a policy perspective? Because it does matter. In the near term, it's going to matter from a shock perspective, but in the longer term, it's going to matter from an economic perspective.
Okay, let's go there. Boring. Mag 7, Sarah Hunt on acquiring additional shares of her 5 years ago NVIDIA position. Are we buying more NVIDIA? Are we buying more Apple? Are we buying more Mag 7?
I think we're being careful to make sure that we don't go too far underweight on any of those. I think it's hard with some of the valuations to want to start a full position immediately, but at the same time, you could have said that almost anywhere along the way in the last couple of years. So that's where this year is going to be important. And even the recent run up to an all-time high and then a fall back for NVIDIA, depending on your time frame, maybe give you a small opportunity there. I think from a longer term perspective, it's hard not to own these stocks.
Paul?
Exactly.
Page 2, the DES screen.
Yeah.
Apple, 66% institutional ownership.
Oh, yeah. Yep, absolutely.
I have no idea what that number means, but it's right there. It's on the Bloomberg Professional Service.
Exactly right. So, Sarah, I mean, it feels like if the Fed is only going to be cutting maybe once or twice in 2025, it puts more pressure on earnings out there. And the earnings, I think the earnings expectations are like double-digit kind of earnings growth. Is that a potential risk for this market?
It is. I mean, if you looked at last year, it was the same thing. And actually, we thought that was a bit ambitious last year to say that you were going to get 10 to 12% earnings growth. And in fact, you did get it. So I think the question really becomes, what sectors are going to be problematic for that? Tech is already doing okay. Oil prices are much higher than people thought they were going to be. The energy sector was a disappointment last year. And the financial center with the yield curve here might be good too.
WTI crude oil, Tom, up another 3.25% here to $76.
You've nailed that, 70 to 76. I mean, is energy value or is it a value trap?
I think it was a value trap. I think that there was a lot of global issues against hydrocarbons, generally speaking. I think we're starting to shift that and realize that if we're going to have all this technology, we need to have an and not an or. So all of a sudden, that space becomes more investable. And I think it was problematic for the last couple of years, but I think it's getting better.
Thank you so much. Sarah Hunt with us this morning to get us started on the equity markets. But with Alpine Saxon Woods, but she doesn't have a British accent.
No.
So if we're going to talk about London blowing up in the UK and a gilt, we got to find somebody with a British accent. Sarah Hunt, thank you so much. Who would that be? No one better than Jane Foley, head of FX strategy at Rabobank. Jane, I think the coverage in the British press of these higher yields, these spiking yields in London has been very fits and starts. Let me cut to the chase. Is this Liz Truss 2, or is it the second coming of 1976?
Well, to be honest, I don't think it's either. I mean, certainly, Liz Truss comes to mind. It was only in 2022, of course, when she was the Prime Minister very briefly in the UK. And when we saw, bond yields really spiking high. But there's a different sense here. There's perhaps less panic. That doesn't mean to say the situation isn't as serious. But this is something which perhaps doesn't need the sort of Bank of England emergency sort of response that we had in 2022. But we do need the Treasury and the Chancellor of the Exchequer to make it clear what is she going to do right now. And whilst we can say that when the Labour Party came to power last July, when the Chancellor took this position, she was dealt a very poor hand because, of course, UK debt is very high, nearly 100% of GDP. That budget on October the 30th, really has knocked business confidence. That perhaps will knock investment, knock growth expectations. And it is this retuning really of the new outlook for the UK economy that is really driving what asset prices are doing now, and that outlook isn't looking very great.
Is there an opportunity here, a big figure opportunity on cable? I mean, if they fix this thing over the weekend, do you get a 4 big figure move on cable up to 120 whatever, or can it, dare I say, go the other way?
Well, cable could certainly go the other way. I mean, 120 looks a very long way away right now, particularly given the strength of the dollar. I think if we were to go back to 120, that would be because there is a broad-based correction of the dollar, which I'm not anticipating that particularly either. Maybe a little correction depending on what payroll says today. That might be due. But 120, no, that seems a long way away because, like I say, if we go back, say, to the first half of last year, what we had for the UK was better than expected growth in the first 2 quarters of the year, expectations that the new government was going to bring political stability, that it was going to bring more optimism about growth. And here we are, 6-7 months on, and what have we got? Well, there was no growth in the third quarter of the year last year for the UK. We've got disappointment in terms of political stability. Musk really stirring it up in terms of the position of Starmer as Prime Minister, for instance. And, we also have this budget position, which doesn't look too stable right now. I mean, the budget made it clear that the Chancellor was giving herself very little room if she was going to achieve her fiscal rules. And hey presto, we've got no growth, which reduces receipts into the Treasury. Plus, we've got higher funding costs, which obviously reduces the Treasury's costs. And that headroom is completely depleted. So what is she going to do? Is she going to hike taxes even more? Is she going to, give us more austerity? So all of these things are pretty difficult. So there's no quick way out for sterling here.
We got Paul Krugman coming up, the Nobel laureate, here in a couple hours after the jobs report. But Paul, this is the heart of the matter, and this goes back to Stiglitz 101 at Columbia. As Jane Foley correctly states, all of this links back into the presumed growth rate, the little g, of an economy. And we're not hearing this in America because of American exceptionalism and all that. But in Italy or in China or in the UK, the little g's really under the microscope.
It is. And so, Jane, I mean, here at the States, we're looking at pound sterling and 1.23. I mean, down 8.5% just since late September. Where do you think that goes? I mean, is there value there, or is it just the falling knife situation? What are you hearing?
So first of all, we've got to get payrolls out of the way. So whether or not there is a little bit of a correction on the dollar, there's a lot of good news priced into the dollar. There could be if that number comes in weak. So get that out of the way first. And then we start to look at, the first few weeks really of the Trump presidency. What is he going to announce? Again, is there too much good news priced into the dollar? Now, there is going to be, I think, a bit of a lumpy road. But, I think we've probably, over the next couple of months, say the next quarter, probably still got the dollar remaining pretty firm. I think if we do have those corrections, they're going to be fairly shallow because, as you just rightly pointed out, US growth for this year is going to be in round about the 2%. If you look at the Bloomberg consensus, whereas for the Eurozone, it's going to be about half that. Germany, France, Italy, all below 1%, according to the Bloomberg consensus for GDP in 2025. Chinese growth is going to be weak. And that brings us to the question about, will these economies want a weaker currency? Will there be some sort of degree of currency war going on for some of these current countries in order to really promote their growth backdrop? And so, yes, I do think that cable could certainly weaken further. I said 120 earlier on. I should have said something different. I think cable could certainly go to 122, probably fall to 120 if the dollar strength continues. And certainly a rally for cable is I think not on the cards for the months ahead.
Jamie, you talk to your clients at Rabobank. What would they like this UK government to do. What is is there a fix out there at all?
You know what? I think if you were talking to gilt market clients, I think they would want austerity. The gilt market wants to see a little bit more austerity. I don't think it went down well when the Chancellor was talking about a bit of a sugar rush, after the budget. I think they would want her to pare that back. But that, of course, would not necessarily go down well with Labour voters who put this government in power in July last year. So this is a tricky mix. Now, the Chancellor could come through and say, I don't want to announce more austerity, therefore I'm going to announce higher taxes. But that, of course, would not go down well, A, with business, and B, she had said, or the Labour government had said in the manifesto, they're not going to raise taxes on workers. So she could break those promises. So it's really not clear. I think there's a possibility she will announce austerity and try and say she's going to do it later in the Parliament, and then hope that the growth comes back and she can avoid doing that. But the market is likely to see through that. So the gilt market, I think, is going to remain defensive unless we see austerity.
Jane, very quickly here, let's do the Rabobank discussion with corporations as they hedge their transactions. Do you advise corporations to plan on a resilient dollar? Do they hedge into their international transactions based on a resilient or stronger dollar?
Well, certainly that they should be hedging, and I think the strong dollar theme is certainly easy to argue. I mean, the only problem with that right now is that everybody is on the same page. So that of course raises the possibility of some degree of corrections, hence the importance of the payrolls number. But I do think it's very easy to argue in favor of the dollar right now from so many different points of view. And I think the strong dollar theme is going to be a lasting one through 2025.
Thank you for the London brief. Gilt-edged Jane Foley with Rabobank. It is Jobs Day. Claudia Sahm before the report, Ellen Zenter after the report. The laureate, Paul Krugman, will join us in the 9 o'clock hour. With your news in New York City, here's Michael Barr.
Thank you very much, Tom. Paul, Lisa, firefighters are making progress on controlling the deadly blazes in Los Angeles, with 4 out of the 5 major fires showing signs of being contained. More than 180,000 people have been displaced and more than 9,000 structures were destroyed or damaged. Los Angeles Mayor Karen Bass said the Biden administration's pledge to cover 100% of the cost of the fires is unprecedented.
President Biden and Vice President Harris just could not have been more supportive.
At least 10 people have died. Kimiko Nickerson says she found her father in his bed after fire swept through the house. She says her son, who lived with his grandfather, begged him to leave, but he wouldn't.
He just kept telling my dad, come on, pack up the car. Papa, come on, let's go. Yeah. And he was like, I'll be right behind you. And he put some stuff in the car that's still there. And Chase was like, Papa, we got to go now. And he says, if I need to go, I'll go. But grandson, I don't need to go right now.
The economic losses are estimated to be $135 billion to $150 billion, making it one of the costliest natural disasters in modern U.S. history. President-elect Donald Trump is facing sentencing for his New York hush money conviction after the Supreme Court refused to intervene. The court says Trump can still appeal the criminal conviction in the ordinary course. The president-elect in a news conference said the Supreme Court's decision is fair.
I respect the court's opinion. I think it was actually a very good opinion for us because you saw what they said, but they invited the appeal, and the appeal is on the bigger issue.
Trump is expected to appear via video for today's proceeding. The U.S. Supreme Court will hear arguments on the future of TikTok in the U.S. with a federal law set to ban the app if it isn't sold by its Chinese parent company. The case pits national security against free speech, with the Biden administration defending the measure and TikTok creators arguing it infringes on their First Amendment rights. Global news 24 hours a day and whenever you want it with Bloomberg News Now. I'm Michael Barr, and this is Bloomberg. Tom, Paul, Lisa.
Been waiting for Friday here with all that we've had, particularly the fires. They haven't talked about it. Let's start with the game. It shifted to Arizona, right?
Yes. You're talking about the Rams game.
Yeah,
yes.
The Rams game.
Yeah.
Will Brinson at CBS Sports has the Rams in the Super Bowl, but not the Lions.
Oh, I read that article, and boy, he got called out, by the way, by a lot of people.
A lot of people.
Because they're like, hey, how can you not include the Lions at least being competitive? So
yeah, absolutely.
You know.
It's fun. I look at every single game and it's of interest. There's like no ringers, are there?
Well, I guess with that Bills cap that you have on your head, it's horrible because they've gone through a heck of a lot in Los Angeles. I mean, but it does take away the home field advantage for the Rams when they go from SoFi now to Phoenix. And I know that that's insignificant compared to what they're going through in Los Angeles, but it is an issue.
Do the Bills have a home field advantage? I think so. Given how cold it is out. Against the Broncos. I mean, 1 p.m. Sunday.
Yeah, that's going to be a good game.
Wild card weekend, arguably the best
weekend.
Should
we book Will Brinson to talk Lions football with Michael Barr?
Yeah, absolutely. Bring it on.
I'm with you.
Big time football.
It's strange. It's like a glorious weekend of sport, and the NFL's done so well, and we're so tainted by this tragedy out west. Rob Carolyn will be with us, an update on the fire. We'll do that in a bit. From New York City, this is Bloomberg's Surveillance.
Markets, headlines, and breaking news 24 hours a day at Bloomberg.com, Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
From the Bloomberg Interactive Broker Studio, I'm Lisa Mateo. Well, we've got futures lower, and this is ahead of jobs day. U.S. non-farm payrolls expected to show a slowdown in hiring. Forecasts that 165,000 jobs were added to the economy in December. The unemployment rate predicted to hold steady at 4.2%, and average hourly earnings growth is seen cooling. We shall see in about an hour from now. Right now, ahead of it, NASDAQ futures down 0.3%, 73 points. Dow futures down 13 points. S&P futures down 15. We have the 2-year yield at 4.28%. That's up 1 basis point. The yield on the 10-year, 4.69%, and that is little changed. Over to commodities. We have oil headed for a third weekly gain right now. Brent crude up 3%, $79 a barrel. We have WTI crude, $76 a barrel. Over to gold, up about 0.5% at $2,678 an ounce. That's spot gold. Shares of Walgreens really on the rise. They're up about 11%, posted stronger than expected revenue at its U.S. pharmacies. And this is the company is considering strategic options, including a sale. We go over to shares of Seven & I, up nearly 5% in Japan. The reason why? Well, sources saying Apollo may take a $9.5 billion stake in the planned management buyout of the company. And that would make it one of the largest buyouts on record with a total equity of $25 billion. And finally, BlackRock said to be in talks to sell its stake in Authentic Brands, which may be valued at $3 billion or more. For on-demand news, 24 hours a day, subscribe to Bloomberg News Now, wherever you get your podcasts. I'm Lisa Mateo. That is a Bloomberg Business Flash. Paul and Tom.
Hey, Lisa, thanks so much. We've got a wonderful economic day with the acuity of the jobs report just after it, with the revisions and all. Ellen Zenter will join from Morgan Stanley. Claudia Sahm, without question, the definitive economist in the land over the last 50 months with her concept of jobs and recession, will join us before the report. Paul Krugman will join us in the 9 o'clock hour. I'm really looking forward to talking to him about how he earned his Nobel Prize, which is international economics. We'll do that with Mr. Krugman. Right now, more on the greater economy and the policy forward of our American economy. Shevin Yeltikin joins us right now from the Simon School, University of Rochester. You've got a single sentence in your note, Professor, that really rings true. Mr. Trump inherits a good economy. Some would suggest he got elected because it isn't a good economy. Which is it?
I think overall, when we look at the aggregate numbers, it is a good economy. We're seeing still a very tight labor market. We're seeing low unemployment. Inflation has certainly been brought down from its sort of peak that we saw right post-COVID. There's a lot more growth, especially when we compare to our, G7, G20 countries. So the American economy looks very resilient. Now, not all of that growth, not all of that sort of strength is shared equally across different parts of the population and industries. And that's where you're getting the mixed messages, because it's not really being distributed equally across the board.
Shevin, we're about to bring in a new president, a new administration. Economic policies, we don't know a whole lot about what this administration is looking to do, but it seems like tariffs are going to be front and center. At the University of Rochester Business School, what's the feeling there about tariffs? Are they good, bad? Do they work? Are they inflationary? How do you think about tariffs?
They're certainly inflationary, and they're certainly very distortionary. And not only that, they're also regressive. So, which means that exactly what the distributional effects that, hit during the election time, that some portions of the population not being able to afford certain amenities, certain basic services and goods because inflation still was hitting high. Well, this is going to affect that population even more, because when we actually put on tariffs, and if it does escalate so that we have an all-out tariff war with our trading partners, it's going to immediately be passed on to the consumers as higher imported prices. And that's going to be very difficult for a lot of folks who are already feeling the pinch on their budgets to stomach.
Professor, is it a Luddite America? Does Donald Trump take in a second administration? And I'm not saying it's United Kingdom in 1811 or 1820 where there were protests against machines, but is there an essence here of a part of America left out of technology? How do they begin to participate in what is benefiting so many of America?
Yes, it's a very difficult situation to resolve. We always talk about, of course, being an educational institution, that education is something that gives you that kind of mobility to be able to stay ahead of the kind of the, skill displacement and technological displacement. That is certainly upskilling is something that we need to do more frequently now. And probably at a faster speed, because it's the technological advances are not just hitting, what we think of sort of more manual or repetitive tasks, but it's hitting across the board to white collar and highly skilled jobs. And when we think about the creative industries, when we're thinking about even, software engineers, it is now a very large disruptive force. I do think that with that force being disruptive across the board, we're going to have to think very, very deeply about what it means. What is the workforce of the future? What is the skill, set of the future so that we can be resilient against this change? We do need to think about sort of upskilling. We do need to think about providing some sort of educational opportunities.
I mean, I'm looking off the St. Louis Fed. Simon Schools in Rochester, 60 miles west, and the snow belt is Buffalo, New York. Sabres play there, and the Bills play there.
That's what I hear.
Okay, they flatlined since the real per capita income has flatlined since 2020.
Yeah.
Period.
Yeah, interesting. So, Professor, here, I guess one of the, again, economic policies of the incoming Trump policy, at least on the campaign trail, was tax cuts. And it kind of brings to the question whether you're raising spending or cutting taxes. It just goes to the deficits and the national debt.
Social Security.
And all these things. Do you care? Should we care? As an academic, do you care about deficits?
Absolutely. I mean, you certainly, I think, have to think about, just like a households or a firms, the government public debt is something we need to ensure that it is sustainable. Now, there's a lot of talk around what is sustainable. People look at sort of benchmark things like, over 150% of GDP and so on, with these rules of thumb. There's really not a very, good theory about what is exactly a sustainable amount of debt. And what we do know is that we want the US dollar to be strong so that the US assets in US debt and bonds are continuing to be a safe haven for the US. So what we really don't want to do is introduce even more uncertainty and even more inflation into the mix, because that's going to certainly hurt the US's ability to service that debt. I'm not as concerned about the total size of the debt. Obviously, we don't want to go on a completely kind of unrestrained spending spree, but we do have to think about sort of how we can maintain the debt service.
Shevin, thank you so much. Shevin Yeltsin with the Simon School, University of Rochester, Dean of the Simon School, providing leadership there is well. We've got to talk about this Friday. There's sort of almost news exhaustion, all of us touched by the LA fires. Rob Carolyn will join us. We've had a huge response to our surveillance meteorologist, Rob Carolyn, at the top of the 8. We're going to do that in 28 minutes if we can track him down. He's so busy as well. That insurance interview yesterday, Paul, you set up was great.
Yeah, and I'm just saying, that's Matt Palazzola. He's a property and casualty insurance analyst at Bloomberg Intelligence. Just this morning, he doubled his insured loss estimate from $10 billion to $20 billion.
That's the insured loss, and I believe you mentioned it, or Michael Barr mentioned it. The overall loss. All of a sudden, 55 billion's become 150 billion.
It's just extraordinary. And so you think about the economic loss, again, 100+ billion. The insured loss, 20 billion is probably going to go higher here. So there's the key thing for me is there's a lot of those losses are uninsured. If that's an issue.
I just got to say, the YouTube live chat is informed.
Very good.
Shevin Yeltsin's up in Rochester, Eastern Buffalo. And John's out there going, I don't think she drinks a Jenny Cream Ale or has a trash plate over at Nick Tahoe's.
Oh.
This is a guy in the know.
Yeah, he's in the know there.
I mean,
Jenny Cream, screamers.
He's I think because she's Dean of Simon School, she's probably Molson, what do you think, Molson Golden Ale?
Yeah, that could be it.
Something
Labatt's,
like that.
Something like
sort
that.
of like an international feel there.
Yep.
Across
no
the
question.
lake. John, thank you for that. We're out on YouTube. Let's talk about that, Paul. Paul and I have been just thunderstruck by the response. What I got wrong, Paul, was the international reach of YouTube. I had no idea.
Yeah, it takes this content globally. Which is
like on steroids.
Yeah, exactly. It was kind of an afterthought business a little bit for YouTube. I mean, for Google 20 years ago, 15 years ago.
Yeah.
Now it's a monster business.
What
for
portion
them.
of Google? I can catch you unawares, but what portion is it of Google? Like 10%?
I'm not sure. I think in value, it's probably at least 10%. And it's a lot of folks say, hey, you spin this thing out, and it'll be worth $1 gajillion.
Here's what you do. Subscribe to Bloomberg Podcasts. Out on YouTube. Oh, there's a new image. Did you see? It's Lisa Mateo in Three Thugs.
Oh, boy.
It's great. She goes, Tom, you don't look like The Rock. I said, I know I don't. I look like I'm writing a tuition check. Stay with us. It's Jobs Day, Bloomberg Surveillance.
Markets, headlines, and breaking news 24 hours a day at Bloomberg.com, Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
From the Bloomberg Interactive Broker Studio, I'm Lisa Mateo. Will the latest payrolls data show the labor market moderating only gradually? That's what's expected. Forecast for U.S. employers added about 165,000 jobs in December. We'll know for sure in just under an hour from now. Ahead of the jobs data, we have futures mix. NASDAQ futures down 0.2%, 49 points. Dow futures little change, up 22. S&P futures down 0.1% or 10 points. The 2-year yield at 4.28%, up 1 basis point. The yield on the 10-year 4.69%, and that is little change. To currency, the Bloomberg dollar spot index is little change, and Bitcoin up 3% at just over 94,000. Few companies making news. We'll start with Tesla. It's launched a refreshed Model Y SUV in China that comes ahead of the release in the U.S. It runs for almost 372 miles. Single charge starts at under $36,000. And sources say Deutsche Bank, it's changed the way it evaluates staff this bonus season. There'll be a greater range of performance ratings, more weight given to non-financial aspects like teamwork. And since we're talking bonuses, sources say executives at top investment
The thought I heard at 731 Lexington Avenue was Sweeney falling off his chair. Are you kidding me?
No bonuses for teamwork.
Stop right now. Paul, are you kidding me?
Exactly. So it's all about the metrics. Back in the day, it was all about how much money did you make, and I'll give you a piece of it. That's as simple as it was back on Wall Street.
But are you a good teamwork person?
Oh, Lisa, stop it. This is just like we're leaving Asia. We've lost so much money. We're leaving Asia.
Yes.
6 months later, somebody new comes in and goes, we're building on Singapore. That's exactly, I mean, teamwork.
Oh, boy.
You're a good team player.
Yes. All right.
Bonus.
Well, when I got partner at Salomon Brothers, that was the big mark against me. Not a team player.
Oh. I just think, would you like to finish your newscast, or are you done?
I'm good.
Okay, thank you. Rich, do we have Ms. Child Friedman with us? She said, we got her, okay. Joining us now, and folks, frankly, this is the interview of the day if you're looking at equity, bonds, or commodities. Audrey Child Friedman holds the high ground, chief G10 FX strategist, but so much more than that. And instead of UK Guild or US or this, we're just going to talk about the dollar impact. Audrey, you've been brilliant on this. If we get a resilient dollar, is that what President Trump wants?
Probably not, Tom, but the problem is that his policies are very supportive for the dollar. So it is a little bit of a conundrum here. You either change and adjust your policy framework and outlook, or you have to put up with a stronger dollar.
So, Audrey, I think I'm just speaking for a friend here. Are we going to get to parity on the euro? And if so, what does that mean for market participants?
What's it mean? Yeah.
I mean, how many times did we ask this question? I'm actually puzzled that we're not at parity yet. I mean, we've had so many reasons to go to parity in the past, let alone in the past 3 or 4 months. And just as it looked like we were going that way towards the end of the year, the liquidity was very thin, even as we started this week. Then you get a kind of a headline from the Wall Street Journal talking about a tariff approach, which actually would be quite helpful for the euro, and you see quite a good rebound in the euro, and suddenly parity is fading away again. But I kind of feel it's still a touch premature to say it won't go to parity. I feel we have to wait and see what happens after January 20th in terms of headlines for the tariff in particular. And once we have more information on that front, I think we potentially have a new narrative coming through. And that could be very binary, actually, that narrative.
Audrey, you worked for a Canadian shop for a while. You should have seen her seats at Maple Leaf Garden.
Oh, yeah.
It's unbelievable.
Sure.
Audrey, when you look at Looney, with all that's going on there, and of course, Mr. Trump talking about it, in jest, folks, is a 51st state. Audrey, can we get a surprise, like things get solved and you get a big figure strengthening in something like the Canadian dollar?
I mean, certainly, given how much of a move we've seen in the Canadian dollar already, how undervalued, oversold, stretch positioning is, it's a wide range of reasons why you could see a bounce in the Canadian dollar and a sustainable recovery in the Canadian dollar. However, I won't move into embracing that view again until we have more clarity on the narrative when it comes to tariff and how much damage is it really going to make to the Canadian economy.
And now, folks, we get out front of the Nobel laureate, Paul Krugman, with Audrey Child-Friedman. Audrey, on tariffs, is there a difference in the magnitude if we put in measured, small, traditional tariffs versus the magnitude of punishment tariffs that President Trump's talking about?
I think it's a question of trying to assess what's currently priced in versus what eventually is delivered. I think at the moment, and you look at the price action in particular early this week, what's pricing is a hard approach on the tariff front, and that's certainly been the rhetoric from the Trump administration, the new potential Trump administration, and the Trump kind of language that we've had over the past few weeks. And certainly this early this week was another wake-up call. Right. So given where we stand and what we expect, any kind of softening or any kind of differentiation on the potential universal tariff approach, that would be a bonus, and that would actually boost risk appetite, and that would help the dollar bearish view regain a little bit of momentum. Thereafter, it'd be just a question of how well does the economy perform.
Right. Audrey Child-Friedman with us. If you'd like a bonus, she's brilliant out on LinkedIn. One of the reasons to join LinkedIn, Terry Haynes is pretty good at Pangea. Okay. Audrey Child-Friedman talking FX out on LinkedIn for Bloomberg Intelligence is very valuable. Our chief G10 FX strategist. There is red on the screen, futures -15. The VIX doesn't move much, 18.42. Yields churning but higher, a 4.93 on the 30-year bond.
Yeah, how about that?
Does that say 8% mortgage?
Yeah, oh my goodness, we're certainly 7% plus here in the 30-year mortgage.
Speaking of ugly, with our news in New York City, Michael Barr.
Oh, Tom, Paul, Lisa, thank you very much. The scale of the devastation of the Los Angeles wildfires is becoming clearer, with at least 10 people dead, 10,000 structures damaged or destroyed, and 180,000 residents forced to flee. Residents in the hard-hit Pacific Palisades neighborhood are in shock.
Pacific Palisades right now could just be taken off the map. There is no Pacific Palisades.
FEMA Administrator Deanne Criswell said the federal government is committed to helping communities rebuild.
With the major disaster declaration, we now have the ability to begin having those conversations about recovery, as well as help the individuals who have lost everything jumpstart their road to recovery.
FEMA Administrator Deanne Criswell. President-elect Donald Trump is facing sentencing today for his New York hush money conviction after the nation's highest court refused to intervene. With Trump 10 days from inauguration, Judge Juan Marchand has indicated he plans a no-penalty sentence called an unconditional discharge. Prosecutors aren't opposing it. In a news conference last night, Trump said the Supreme Court's decision is fair.
Well, they called for an appeal, and as you know, they acknowledged what the judge said about no penalty, and there's no penalty. But we're going to appeal anyway, just psychologically, because, frankly, it's a disgrace.
Trump is expected to appear via video for today's proceeding. The law that could ban TikTok is coming before the Supreme Court today. The popular social media platform says the law violates the First Amendment and should be struck down. The U.S. government argues that the app having a China-based parent company means it's a potential national security threat. The law is set to take effect January 19th. Global news 24 hours a day and whenever you want it with Bloomberg News Now. I'm Michael Barr, and this is Bloomberg. Tom, Paul, Lisa.
Mitch Jeter, field goal kicker. I mean, he delivered the goods, to say the least.
Yeah, it was a crazy last, 10 minutes of that game, but but the TV networks are happy. You got Notre Dame in the Nationals.
You got Notre Dame in the Nationals. I mean, that's like Nirvana as well. This kid kicked a 57-yard field goal against the Cabarrus Warriors in high school.
Did he?
Yeah.
Like he was scouted by Premier League types.
Yep.
Coach. I'm sure it was kid stuff, but wow.
Yeah, he won it for him. Big kick.
I feel sorry for the spike that never was.
Right.
Because that's what set the whole thing up.
Right. That was a bad play. Terrible play.
Yeah.
So,
who do they? I'm ignorant. I'm sorry. Who do they play?
Well, now you got the Cotton Bowl tonight. It's going to be Texas and Ohio State. So whoever wins that game
plays Notre Dame.
Yes.
Yep.
Wow, Notre Dame. This is James Franklin, 1 in 15, getting it done for Penn State.
Yep.
Sweeney's going to walk out of the studio. It's Jobs Day. Good morning.
Now, a look at the front pages. What's making news around the world? Your daily roundup of today's headlines on Bloomberg Surveillance with Tom Keene, Paul Sweeney, and Lisa Mateo.
Good morning, everyone. Our newspapers, the front pages, they're brought to you by IBKR. Financial advisors switch to Interactive Brokers for lowest cost global trading and turnkey custody solutions at Interactive Brokers. No ticket charges, no conflicts of your interest. That's at ibkr.com/RIA. And we thank Interactive Brokers for bringing us in all her glory the Lisa Mateo Hour. What do you have?
Well, we're all about the data, right? So the data is showing that Americans tipping less than they have in years.
Oh, is this a hot topic?
Yes, this is a hot topic because two reasons. Rising menu prices, and the other one is people are just getting tired of all the prompts. You know, you get the screen that turns, but places you didn't get it before.
No. So here's the
problem.
What do you do?
Hard and fast rule. Here you go. If you stand, no tip. If you sit, tip.
That easy.
That's it. Tell me that doesn't work like 9 out of 10 times.
It's tough. It's like the pressure's on. You're standing there and they flip the screen, and then you're like, what do I do?
Yep.
I just hit a wall a year ago or so, and I just don't tip, sort of like standing. I think that's brilliant.
Yeah, I do.
Yeah.
And I tip my local place. My local places.
Yes.
I tip at a restaurant. I always tip very well, 20%. Then I round up.
Okay.
And in my local places where I know the servers, where I go all the time, I'll tip above and beyond that. So I want to walk in there and say, Sweeney's a good tipper.
Right. In Paris, I tip big like an ugly American. They love me. In London, it's so screwed up. The waiters they're ruined by the way they do tipping in London. It's terrible.
Because they get paid more, right?
That's the gimmick, but I don't buy it. They're getting taken to the cleaners in London. Next.
Okay, we all know the price of beef, right, on the rise. Yep. But did you know it could get even higher because of freezing temperatures in the Corn Belt? I did not realize that, but the Wall Street Journal breaks it down because colder weather in pastures produce this thing called prussic acid in the grass, and if the cattle eat it, they can die. So the cattle producers are having to regulate what these cattle are eating, and so the cattle are losing weight, and so lower weight cattle produces less beef, which means the prices are going to go up.
All right, I watch Yellowstone. I know all about the ranching business. That is a tough business, man. I don't know why that is hardy souls of people. I mean, there's so many areas where you can get screwed in the ranching cattle business. That is a tough way to make a living.
It's like a double whammy because the USDA just suspended exports of live cattle from Mexico because there was a parasite found in those, and they haven't lifted it yet. So that on top of these freezing temperatures.
I'm looking at live cattle on the Bloomberg. It's a moonshot.
I know.
It's basically a double off the pandemic. Yep. Wow. Next.
Yep. Okay, so there's a new.
I learned something.
I know.
Oh, you're going to learn something here. Okay, there's a new side hustle where people are earning about $30,000. Making job referrals for strangers. Okay, so stick with me here, okay? Companies offer these bonuses, right? So when you refer someone, you get a nice bonus. Usually it's someone you know, but not anymore. One tech worker told Bloomberg he referred over 1,000 job candidates. He earned $30,000 in bonuses. He didn't even know them. They were all copied and pasted. And the reason why it's so big is because job seekers are going to these underground places like Blind, Glassdoor, Refer Market, and they're making the connections. And people are just saying, hey, I'll refer you.
Lisa, that's how I got my job at
No, you're not supposed to say that.
One more.
Finally, I got to go congestion pricing, okay? So with this, there's no surprise here. Congestion pricing is sparking these phishing scams. So now people are getting text messages from toll fishers saying that they owe a late fee. And then people are clicking on the link, going to these websites.
Thank you. That's important.
Yeah, so it's very important. They're putting out the warning, don't fall for it.
I got 30 seconds. None of this matters on Jobs Day. You've detected an egg shortage?
Yes. I went to the supermarket. There were no eggs anywhere. I talked to our expert, Ken Fellew, who told me that he's having the same issue. Gone. And the prices are sky high.
The bird virus?
The bird flu. Yes, the bird flu. But Ken says go to Walmart.
In honor of Jimmy Carter, one of the great joys of doing Bloomberg's, Lisa Mateo, thank you so much, the newspapers. Thank you, Chuck Lavelle of the Allman Brothers, for your support over the years of what we do here. For Jimmy Carter.
This is Bloomberg Surveillance with Tom Keene and Paul Sweeney.
What do you say to people scared stiff in cash?
We've got an administration, presumably, that will be pro-business, lower taxes.
With Lisa Mateo on markets.
AI affecting demand for cloud computing.
And Michael Barr with news.
U.S. Secretary of State discussed the conflict in Gaza.
The best in economics, finance, investment, and international relations. This is Bloomberg Surveillance on Bloomberg Radio.
Good morning, everyone. Tom Keene, Paul Sweeney, Michael Barr, Lisa Mateo. It is Jobs Day. In 29 minutes, a huge variance on non-farm payrolls. Paul, I'm going to be looking at the wages. They're pretty much boring and on survey, but a lower wage growth or a higher wage growth would really change the Fed dialogue to the end of the month.
Exactly, Tom. And the average hourly earnings on a year-over-year basis, the consensus is 4%, Tom. We got a whisper number on the change in non-farm payrolls. Consensus there is 165. The whisper number, WHIS-GO, is 185.
Is a higher number.
It's a higher number.
And it's a really interesting variance here. We'll go Claudia Sahm with us, Ellen Zenter with us. We'll start strong in this hour. Stephanie Roth scheduled to be with us here. We got to get her out of the food court. I mean, she's up there eating all the healthy stuff. Stephanie Roth will join us from Wolf here to brief in on the details of the report. Bloomberg Surveillance this morning. Brought to you by Cohn Resnick Advisory Assurance Tax. With potential changes on the horizon, will you need to rethink your tax strategy? Cohn Resnick tax advisors can help keep your business at the forefront. Thank you, Cohn Resnick, for your support. Paul, we've decided that you're a commodity maven because of what you're watching. Landman, what's the other show? Yellowstone.
Yeah.
John, thank you. They want you out on an Odessa oil rig in Texas.
Exactly.
Have you ever visited? They make some
I'd
serious money.
Oh, I know.
Dangerous work.
Oh, it's very dangerous work, and it's hard work getting that oil out of the ground. But yeah, West Texas, how good is that?
The cold of Odessa,
President
Texas.
Bush, that's where he hangs out there in Midland.
Yeah, well, his father, that's how they made the first Bush money, is independent oil.
Yeah, I think, again, President Bush 43, I think that's where he lives.
Yeah. Can I editorialize that he had a wonderful spirit yesterday?
Yes.
At the funeral.
Yep.
Nudges.
It's great to see him and,
it's just great to see him and Mrs. Bush there. Yes. Along with the other worthies as well. Speaking of worthies, from the Interactive Broker Studios, the Bloomberg Business Flash, El Mateo.
You got it. And futures mix. This is ahead of U.S. payrolls data about a half hour from now. Right now we have NASDAQ futures down 0.1%, 38 points. Dow futures little change, up 28. S&P futures down 0.1% or 8 points. The 2-year yield, 4.29%. That's up 2 basis points. The yield on the 10-year, 4.69%. And that is little change. We'll get to the 30 year, 4.92%, and that is little change. To earnings we go. We'll have shares of Walgreens. They're on the rise. They're up about 13%, stronger than expected revenue at its U.S. pharmacies. And then you have Delta up 6%. Topped estimates on demand for overseas travel. Yeah, but you know what that's also doing? It's pushing up American Airlines up 6%. United Airlines up 7%. Constellation Brands, finally, that's the owner of Modelo, Corona Beer, down nearly 3%. Widen its comparable earnings per share forecast for the full year. That is your Bloomberg Business Flash. Paul and Tom.
Lisa Mateo, thanks so much. He has been a pillar of strength for us the last number of days in predicting and assessing this horror that we're all living. Everyone has a direct tie-in, a direct story to family, friends, and acquaintances in Los Angeles. Rob Carolyn is our Bloomberg meteorologist. Rob, let me cut to the chase. When do the winds become larger again?
Probably about an hour or two after sunrise on the West Coast this morning, Tom, and it'll primarily be from the Santa Monica Mountains into the San Diego Mountains. They'll see the highest gust today, probably up at times in the San Diego Mountains over 65 miles an hour. That'll happen from about 8 this morning till about noon or 1 o'clock Pacific time. And then through the afternoon, this pulse of Santa Ana winds will start to diminish. And they're actually going to see the winds along the coast, away from the mountains this afternoon, start to turn onshore, which will be helpful because that will raise the humidity a bit. Really not going to have a huge effect on the temperatures this afternoon. They'll stay above normal, but a relative humidity amount should come up some tonight and tomorrow with an onshore flow. And then the bad news is it looks like another pulse of Santa Ana winds headed their way Sunday through Wednesday of next week.
Do you as a pro say that will lead to increased threat to people and structures, or do you say there's already been a fire, the fuel's been burnt, so it's not as big a deal as the horror we've lived?
No, it's still a big deal, Tom, because there's lots of areas that didn't burn, and the fire danger in the San Diego and Los Angeles area is still very high. Both cities are under red flag warnings through 6 p.m. tonight, and we'll probably see more red flag warnings go for the areas that weren't burned Sunday afternoon, Monday, and particularly Tuesday of next week.
Rob, is there any precipitation anywhere in the forecast for Southern California?
The only thing we're seeing headed their way, Paul, is an upper-level low that's going to kind of sit offshore by Thursday, and it's actually going to tease them with some sprinkles. The Los Angeles County area since October 1st has had only 0.16 inches of precipitation. Wow. There's been a ton in the northern part of the state, but it's been bone dry in Southern California since the 1st of October. Right. That's how they look at their rainy season, is October 1st through March 31st, and they've had so little precipitation, and I think we're looking at maybe 100th or 200ths of an inch by Thursday. That's it.
Oh, you're killing me. Rob, one East Coast question, if I can.
Sure.
We've enjoyed persistency of wind amongst our cold like I've never seen. Is the day after day wind of the East Coast unusual now?
It is. We've been in a blocking pattern, Tom. Everything's been bottled up between the eastern portion of Canada and Greenland. We call it the Greenland block. So we had a low that brought the snow to D.C. on Monday. That's been trapped over eastern Canada all week. It's finally getting kicked out this morning by a cold front dropping across the Great Lakes. You'll notice the winds across Boston, D.C., and New York decrease today.
Right.
They'll stay away, and they're just a little breezy on Sunday. But the really strong, persistent winds of this week are gone, and so is the chilly temperatures. They'll moderate as we head through the weekend.
So Stephanie Roth just sent me a note, Rob Carolyn, handed it over to me here in the studios. If we take over Greenland, does that stop the Greenland block?
No, it'll make it worse.
Thank you. Rob Carolyn there on our international relations. And for all of us at Surveillance, Rob, thank you so much for 24/7 coverage of this horror on the West Coast. We go to Jobs Day. We've got Paul Krugman, the laureate, at the 9 o'clock hour. We do better than that right now with Stephanie Roth joining from Wolf Research. Stephanie, I want to go to the granularity of what we're going to see at 8:30. What will you focus on beneath the headline data?
So probably the number one thing is going to be the unemployment rate, but not just the one decimal. We're going to be looking down to 3 decimals this time.
You go out to 3 decimals. You are such a nerd. You don't round it to 2 or 1?
You got to go to 3. So the last month, it barely rounded down to 4.2. So you can get a 4.3% reading with very little change from a month-to-month perspective. So that's really why you probably should go at least look at out to 3 decimals. Because if you get a very modest increase up to 4.3 and it barely rounds there, it wasn't a big change. If you're now rounding up almost towards 4.4, then that's a big change from where we were last month.
Does the Federal Reserve, is that what they're looking at? Is that unemployment rate? Is there a number where maybe the Fed says, okay, maybe something's going on out there?
Yeah, I think once we start getting towards 4.4, then they're going to get a little concerned. 4.3 is kind of largely expected at this point, but if you start inching up towards the 4.4 and certainly 4.5, you're really going to get their attention, and they're going to have to probably change in a more material way.
The wage dynamics of America, is the real wage increasing?
Yeah, I mean, our inflation is running at a 2% almost pace. It's slightly above 2%. It'll probably be stuck there.
Paul mentioned 4% as a wage growth.
Yeah, 4% is your wage growth. You have real wages, which is great. This is different than where we were 2 years ago.
Exactly. So, I mean, and we had the JOLTS data just recently, and it came in a little bit higher than expected. Yeah, I know. We got it. So if it's on ECO Go, I'm all over it. So it feels like we're still at kind of full employment. Is that still the case, do you think?
Yeah, I think that's right. We're at full employment. The growth rate has certainly slowed down, but we're kind of steady state at this full employment. Within the JOLTS data, yeah, job openings did pick up. The quits rate did fall down. So you had some conflicting signals there. Granted, it's also lagged by a month. So that was already a strong month for employment. We already knew that with the payrolls data. Now we're going to learn just, for one additional month what happened in the month of December.
So with relatively full employment, with wages growing, real wages growing, are you constructive on the U.S. consumer here? Yeah,
we're positive on the U.S. consumer. We're looking for a GDP growth, generally speaking, above trend. Consumer is a huge part of that. It should be slower than where we were last year. So the excess savings do continue to wind down a little bit. The strength in the stock market had boosted consumer spending for a lot of last year. That will probably fade to some extent just as you move throughout the course of this year, unless of course we see another robust year for equities. But we're not certainly assuming the type of gains that we got in 2024. But the consumer's good. As long as they're employed, the consumer should continue to spend.
Why is there then so much gloom out there? We talked earlier with another guest about the Luddites of 1820 in England, and maybe there's a technology miss here as well. I get your optimism. We just saw Delta Airlines hit the ball out of the park over the turnpike. Okay, great. But that's Red Sox talk, Stephanie. I know you don't understand that. But the answer is, I don't understand where Donald Trump's America fits into your enthusiasm.
So I am concerned about tariffs, but our base case is that tariffs don't become a real problem until 2026, because that ties into the Tax Cuts and Jobs Act, which is likely to do later in the year. Tariffs are probably going to get tied into that because they do need to raise revenues as a result. So for much of this year, it could be a decent year, which is what we saw the last time too.
How are we going to raise? Villiers had a blistering note today on this. How are we going to raise revenues?
One is tariffs. That's probably one of the bigger ones. I mean, this bill is expensive. Tariffs do raise a decent amount of revenue, and then they're going to be picking from a bunch of different areas. Healthcare is one part that Medicare, could be an area, but they're going to try to pick at a lot of different areas of the economy to raise the rest of it. But a big part of tariff revenue could be a substantial offset for this bill.
You're an economist. How concerned are you about deficits and the national debt? Because all I hear about, I don't care who's in office, either higher spending or lower taxes, and that just contributes to our deficits and national debt. Yet nobody seems to care. As an economist, do you care?
I care, but it's a problem for the long term, right? Like, it matters once the bond market decides this is a real big problem. And there have been a couple of moments in the past couple of years where the bond market got concerned, but for the most part, as long as markets are okay with it, it's not a tremendous problem for the economy in the near term. One big benefit that we have as the U.S. economy is we're the reserve currency. So we don't have the same type of emerging market problem where all of a sudden people flock out of the currency because they're concerned. When in times where there's been concerns about the deficit, the dollar has often rallied as a result of a risk asset sell-off.
I just took, Paul, you're sitting here, looking at who you're going to, Texas or Ohio State, Paul, what do you think?
I think it's Ohio State. They look like the best team out there.
Paul's looking at that. I'm looking at semi-log live cattle back 50 years, 55 years.
You have to have an opinion on
It's a well-organized regression. But when I get cattle out almost 2 standard deviations with a surge up, we substitute to chicken. I mean, that's Econ 101.
Sure.
With housing, how do we substitute?
Well, first of all, we just put out our forecast for next week's CPI, and we're going to see just continued pressure from a food price perspective with poultry and the bird flu issues, but that's putting it aside.
Lisa Mateo's our egg correspondent here. But how do we substitute OER, rents, housing? I don't get it.
Well, rent inflation has come down a lot. Of course, there's been a level shift up, no question. But OER is starting to come down. If you look at the last CPI print, it actually took a notable step down. So we're starting to see OER come back down towards what's happening in the market. And market-based rents have slowed down because there has been a decent amount of supply that's come online. So arguably, the substitution away from house prices, which are kind of unaffordable, is to the rental market. And that's what we've seen to some extent, but at least the rental market has cooled.
So what are the concerns for you out there for this economy?
Number one is if I'm wrong on the timing of tariffs and we get tariffs next year, we get tariffs this year, then that really challenges certainly our outlook for 2025, but also that's a problem for the Fed. And of course, the Fed told us they're starting to incorporate some amount of fiscal, but not fully. Yeah. So that's probably number one. Number two is we're assuming that there is this boost to confidence that we're starting to see as a result of deregulation. If that disappoints, then you could be in an economy where rates are high and we're starting to get that slowdown.
John Miller Samuel, out with the rents. Thank you, Cranes, for the summary of this. We'll get John Miller on here on rents in Florida. McGlone insists we get John Miller on. But anyways, I'm looking here at rents. Manhattan, $52,000 a year, average rent. That means if you spend 1/3 of your paycheck on rent, pre-tax, you got to pop $158,000. Stephanie Roth, is that a broken system?
It's a problem, no question. The thing is, yes, rents have picked up pretty substantially over the past couple of years, but so have wages as well, right? So income growth has kept up not quite as much as rent growth has.
And
but
I saw a chart the other
close.
day that shows that.
Right.
You are very correct on that.
So that's one reason why consumers been able to spend even though prices have gone up so much, because their wages have almost kept up. Certainly with core CPI, it has been fairly close.
Very quickly, I want to get to your important insight at the beginning of the conversation. We go 4.3, 4.4, 4.5. Where's the Stephanie Roth tip point on the unemployment rate?
So, I mean, our base case is actually the unemployment rate comes down this year because immigration is going to slow down. And by the way, that's another concern for this year that we didn't talk about. We actually think the unemployment rate is going to come back down this year a little bit.
Under 4%?
No, not under 4%. Come back down from the 4.3 that we're projecting for this month.
Okay.
Somewhere between 4.1 and 4.2 for much of this year.
We'd let you stay here and listen to Michael Barr, but since she takes the unemployment rate to 3 decimal points, see ya. Stephanie Roth, thank you, with Wolf Research today to really get us started here in our coverage. Again, Ellen Zenter, Claudia Sahm, and Paul Krugman to join us here before and during and after this jobs report. We'll have that in 14 minutes as well. Red and green on the screen right now. The VIX giving me no love, 18.32 in, I love how Paul Sweeney says this, Lisa, the yield space. The Sweeney yield, 4.29% as well. I'm watching 30-year bond, 4.93% out to 3 decimal points. Thank you, Stephanie Ross. A 10-year real yield, 2.27%. Paul notes elevated West Texas intermediate. With our news in New York City, Michael Barr.
Thank you very much, Tom, Paul, Lisa. Fire crews in Los Angeles continue their efforts overnight to beat back at least 5 major fires threatening hundreds of thousands of acres across the city. More than 180,000 people have been displaced from mandatory evacuation orders, with more than 9,000 structures destroyed or damaged. Residents appear to be in a state of shock as they process the scene around them in neighborhoods like Pacific Palisades, where whole blocks have been decimated.
Mars would be more habitable than this place right now, so it's crazy. There's absolutely nothing.
FEMA Administrator Deanne Criswell said the federal government is committed to helping communities rebuild.
For something as catastrophic as what I have seen so far here across Los Angeles, we know that this recovery is going to be complicated. But it is doable when we all come together with the city, the state, the federal government, our nonprofit partners.
FEMA's Deanne Criswell. President-elect Trump will appear virtually this morning for sentencing in his criminal hush money case in a New York court. He will be appearing from his Mar-a-Lago estate in Florida. This comes after the Supreme Court refused to delay Trump's sentencing yesterday. The judge in New York will not sentence the former president to any jail time, and the Supreme Court has said that Trump is free to appeal the case. Former President Jimmy Carter was interred alongside his late wife Rosalind Carter in Plains, Georgia. Yesterday, Carter was honored with dual funerals. His afternoon funeral in Plains was a small affair limited to family, friends, and members of Maranatha Baptist Church. Carter's personal pastor, Tony Loden, said the former president dedicated his life to service.
His covenant to spread joy is a testament to his character and his leadership. He advocated for justice, fairness, and equality for all people, regardless of race, creed, or gender in America, all around the world.
Earlier Thursday, President Joe Biden eulogized the 39th president at Carter's state funeral in Washington. Global news 24 hours a day and whenever you want it with Bloomberg News Now. I'm Michael Barr, and this is Bloomberg. Tom, Paul, Lisa.
Michael Barr, thanks so much. To Paul Sweeney here on where we'll be 12 months from now. Saturday night, 8 p.m., Steelers-Ravens, real football game.
Yep.
Amazon Prime Video.
Yep.
That it's proven now, Paul? Are we proof of concept has happened?
Proof of concept. And this is the way I think about it. I think the younger demos, they're already there. It's zero issue. There's no friction
like Michael
for them.
Barr.
Exactly. There's no friction for them to consume a football game or
They
a
got
baseball
color
game.
TV now?
And even people, so I think okay, it's 61 years of age. I'm representative of a certain demo.
You're that old?
Even I'm
well
getting
preserved.
comfortable with it. I know.
How do you do? What's the secret?
I don't know. Even I am
Budweiser?
fairly comfortable. Yes, in cans. That's the house brew.
We're about the same. We are the same age, and you dash
cut
Rip
and
Rock,
chiseled.
and here I am.
He looks like The Rock.
Yeah.
So it's. I'll find it on Amazon.
It's on Amazon, but how is Netflix observing this? This juggernaut of betting in the NFL aren't they having a meeting at Netflix? Like, why don't we own this?
Netflix has had since the beginning of the company, they've said we're never getting into long-term, to big-time sports. That will change. That is changing. They are dipping their toe, and they will get in there.
Dipping their toe?
They will get in there and bid for a Sunday package, I think, for the NFL in the not-too-distant
We now
future.
go to someone with a better rotisserie league than Damian Sassara and Cy. Michael Barr, Steelers-Ravens. What do you think?
Ravens.
Gotcha.
Ravens. And I'm sorry, Mike Tomlin, but boy, the Ravens look very good.
My amateur take of the 10 minutes of Ravens I've seen is they look like a real football team.
Yeah, they could make it. They could beat Kansas City. That's the one team I think that could beat Kansas City. Even Buffalo is going to have a heck of a time with that.
Are the 49ers in the playoffs?
No, and that's why Mrs. Barr is.
That's why you're sleeping in the garage?
Oh, yeah. It's cold out there.
I'd be glad you're not at Lisa's house. She's got 3 freezers in the garage. Just open the door. Michael Barr, thank you so much. Paul Sweeney on a streaming Amazon Saturday night. Good morning.
Markets, headlines, and breaking news 24 hours a day at Bloomberg.com, Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
And this Bloomberg Business Flash is brought to you by Oracle. Attention growing businesses. Oracle offering to cut your current cloud bill in half if you move to Oracle Cloud Infrastructure for new U.S. customers with minimal financial commitment. Offer ends March 31st. See if your company qualifies at oracle.com/Bloomberg. All right, we are moments away from payroll data, so let's get to the numbers ahead of it. NASDAQ futures down 0.3%, 78 points. Dow futures little change, up 5. S&P futures down 0.2% or 15 points. The 2-year yield 4.29%. That's up 2 basis points, and the yield on the 10-year 4.69%, and that is little change. The Bloomberg Dollar Spot Index, that is little change. We'll check in with chip stocks. New chip export restrictions kind of expected to be announced soon by the Biden administration. You have Nvidia down 1.5%, Advanced Micro Devices down more than 2%. And finally, insurance stocks with the wildfires in Los Angeles. Allstate down 5%, Progressive lower by 4%, and Chubb off 3%. For on-demand news 24 hours a day, subscribe to Bloomberg News Now. Wherever you get your podcasts, I'm Lisa Mateo. That is a Bloomberg Business Flash. Paul and Tom.
Lisa, thanks so much. Greatly appreciate it. We're with you now, commercial-free for the next 35 minutes. Thank you to all of our supporters for that. Good morning out on YouTube, particularly, and on your commutes across the nation. Kristina Campmany will join us. Rebecca Patterson will join us, and Ellen Zenter will join us. But we start strong, like Krugman, the Nobel laureate, someone who's changed American economics. Claudia Sahm joins us. Professor Krugman joining us in the 9 o'clock hour on our international economics. Claudia, let's go domestic right now. I don't want to go to the Sahm rule and recession, but I see two Americas. How do you discern a prosperous, productive, and less prosperous America in the jobs report?
Wow, that's a tough one. I mean, what we want to see in this jobs report is balance, but balance throughout. Right, we've seen a lot of concentration in certain industry sectors. That's what we don't have a lot of really detailed information on jobs day, but what we can dig into what we have. To see something sustainable and something that touches many more workers, we need to see it across, across a lot more industry sectors. And something I look at that I know we won't get an update today on, but we did earlier this week, are workers who feel like they are empowered to go and find new jobs. Yeah. So we saw the quits rate has fallen, and that's a concern, because that's workers looking out around and saying, what opportunities do I have? Do I have something better, or do I just stay put? And I think that's one where we want to see that stop declining and really level out and improve even.
And Paul, this out on YouTube. Jack, thank you. I'll watch Brownville's Food Pantry. Brownville, Texas, sure. I assume. Yep. That's the heart of the matter, is the lines outside the food pantry are real.
Yeah, exactly. So, Claudia, here, you talk about where the jobs are being created. We hear a lot about hospitality, maybe some healthcare, and also government. Do we need to see that broadening out?
Yeah, absolutely. I think that's something, if to get into a sustainable, like the labor market is really working, we could keep at this and not have, big concerns about one print or another. We need to see it broaden out. Now, we are still seeing some of these sectors are ones that were the slowest to adjust after the Great Resignation and the labor shortages. So it's not that this is a worrisome sign. It's just that we need to see some more of that broadening and other sectors come in place. And I think that's, we're well positioned for that.
Claudia Sahm, will we see revisions? Like, do you fold in the 2-month revisions into the guesstimate here in 2 minutes?
We have an opportunity today to see some narrative shifting ever so slightly. We get new seasonal patterns, right? So it's, tricky from month to month to know, like, if we say the unemployment rate, how much of these moves were just calendar effects. We later decided, these weren't, we revised these effects, or they were real. And one place I'll be looking is, we know in the summer, the unemployment rate jumped 0.2 percentage point in July, and that set off a lot of concerns about the labor market was slipping fast. So we'll get a little bit of revision, and we get some more revisions next month too. So those narratives matter.
Claudia Sahm with us, and she will continue with us here after we receive the report in about 1 minute. We welcome all of you across the nation on your morning commute. A special good morning to the people of Los Angeles in the immense difficulty that they have had the last number of days. And on YouTube, we say good morning as well. Again, subscribe to Bloomberg Podcast. We're just humbled by the international and domestic reach of YouTube. We go up to the jobs report. Frankly, I do look at the Sweeney yield to 4 decimal points 4.2869%, 4.29% on the 2-year yield, the 10-year, 4.69% as well. And of course, you want to look at futures. They're red and green on the screen right now. I would say a great. If anything, S&P futures have come up a little bit at -12. The VIX really indeterminate at 18.21. There's some other inside baseball stuff we look at on the launch pad, but that gives you a picture here. And I really want to emphasize, just on ECO Go, folks, there's at least 10 lines of economic data, and the pages and pages beneath it that someone like Claudia Sahm and Ellen Zenter look at. The survey is 165,000 with our jobs report.
This is breaking news from Bloomberg.
And we'll start with a change in non-farm payrolls for December. So the expectation, 165,000, came in higher, 256,000. The prior revised up to 212,000. Taking out an average hourly earnings month over month. The survey was for 5,000, came in at -13,000. The prior was for 22,000. Want to hit the unemployment rate as well for December. 4.2%, that was the expectation, came in a tick lower, 4.1%. The prior was 4.2%. Now we get to the reaction on Wall Street, and you really see it with NASDAQ futures down 1%, 216 points. Dow futures down 0.6%, 274 points. S&P futures down 0.8%, 48 points. So the market's really reacting. The 2-year yield, 4.35%. That's up 9 basis points, and we have the yield on the 10-year, 4.77%, and that's up 8 basis points as well. Tom and Paul.
Lisa, thank you so much. That was outstanding. She's doing that in real time, folks. And let me tell you, it's not easy. What do I go to first? I usually don't do this, but I am. The 30-year bond did not print 5%. We're almost there. The high was 4.9970. Yields are up. The 10-year real yield, which is a pro statistic, it jumps. That's the right language. 7 basis points, 2.34%. For the yield up, and again, futures at -50 here. Completely unfair, but we turn to Claudia Sahm again and thank her so much for being with us. Claudia, I'm not going to do the minutia of market economics with you as well, but Anna Wong at Bloomberg absolutely nailed this optimism with a gentle revision. Is it appropriate, Dr. Sahm, to take a 3-month moving average to give Paul Sweeney and me the pulse of American labor?
I always think a 3-month average is a good place to start. I mean, they're good numbers, right? Regardless of market reactions, good news is good news. These are jobs being created. The unemployment rate ticked down slightly, right? Like we need a resilient labor market. We need a labor market that's working for all workers if we're going to get through this year. Right. And so to leave 2024 in a relatively good place, like that is encouraging. So, I would take those numbers, and we've got a solid labor market still, and that's worth celebrating.
And Paul, Stephanie Roth nailed this at Wolf with the unemployment rate 4.2% to 4.1%. Yep. Somehow I will suggest the President of the United States, Mr. Biden, will mention that somewhere
at some point
today.
Exactly. Claudia, how about the wages out there? The consensus was for a 4% annualized growth rate in average hourly earnings. Came in at 3.9%. How do you think about the wage environment out there?
So I think the wage environment is pretty benign, at least when we think about inflationary impacts. I mean, these are still good wage growth numbers for American workers, and that's important for making up for the prior price increases that we've seen. But in terms of the Fed being concerned about it, and they've told us for some time that they don't look at these numbers and they're concerned, it's a tick down, but essentially we've been in that same place. And if you look across a wide range of wage measures, which some more recent research coming out of the Fed has done, I mean, the underlying pace of wage growth really is pretty close to pre-pandemic pace. So this is not something the Fed should be getting real concerned about.
Dr. Sahm, thank you so much. This has become so wonderful to have you with us at 8:30 with your impact on academic and market economics. Claudia Sahm with us on this Jobs Day. In the next half hour, without commercial interruption, we'll bring you Kristina Campmany, Rebecca Patterson, and now from Morgan Stanley, Ellen Zenter joins us. Ellen, I want to go into the data and all that, but I want to go back to early Ellen Zentner, which only you and I were around for.
I'm coming in hot, just like payrolls. I'm coming in hot.
You made your name analyzing the American consumer. To me, that was the great era of economics in the past 18 months. Paul and I opened the show with a booming Delta Airlines. What does Morgan Stanley see is the state of the American consumer given this bang-on jobs report?
Look, not a lot has changed, right? People are still spending on services, not so much on goods. Travel,
Yeah,
and especially the wealthy consumers. And so not a whole lot has changed. In this report, we see it too, right? Goods in the jobs sector are down, spending on goods not as strong as services. Goods are going to be impacted by tariffs more so than services. And so we're going to continue to see that shift between services gaining share at the expense of goods. But this is a more of same. Good jobs market. And yes, there was a lot of rebound in this number from hurricanes and strike in the last month, and that was really the guess on how much of that payback we would get in this number. It's still the story that we've got some ever so gradual softening of the labor market. But man, it's gradual.
Mm-hmm. So, how do you think the Federal Reserve is going to kind of ingest this data today?
I don't know what number would have gotten them to change their thoughts about being on hold here. I think in December, I was more in the camp that the language that they used, the boilerplate language that they used, basically was a hard pause. And now with the January meeting, it's the housekeeping meeting where you have a lot of shifts and voters come in and out. You've got even more of a divergence between doves and hawks on the Fed. And you've got uncertainty around fiscal policy, and uncertainty means policy paralysis. Just on hold here, and we'll let you know when it's time to move again.
In the blur of this show, and trust me, folks, there's like 20 people helping me and Paul get through this every morning. I remember little things, whispers of things from weeks ago, and one of them is an Ellen Zentner whisper. You were heated at the polarity of consumption in America and your definition of the haves. Define the Ellen Zentner haves in America enjoying a 4.1% unemployment rate.
So the unemployment rate, we saw the underemployment rate also come down.
7.5%.
So we're getting strength all the way down to the most underserved in the labor market. But that bifurcation of the consumer, the top two income quintiles is more than 60% of all consumer spending. And
1/5 of America is 60% of consumption.
2/5. 1/5
Excuse
is
me, 2/5.
1/5 is 45%.
I just got a C- in Zentner economics.
Yeah, well,
okay.
I'm here to keep you honest, Tom.
There we go.
But Paul, this is incredible.
It is.
2/5, right? 40%?
Nailed it.
Am I close?
More than 60%.
Lisa, help me here.
You're just not getting this right, Tom. It's too many
Kufu and Esser
numbers.
slide rule here.
It's a whole lot. Let's just say that.
A whole lot. Yeah,
it's
there's
a whole
my
lot.
economics.
So how does that inform kind of your view of kind of investment opportunities out there? Because it seems like the economy, whether you're looking at labor, whether you're looking at the consumer, whether you're looking at the Fed, things seem to be in pretty decent shape out there, right?
Yeah, things are pretty decent shape. I think that it means it's going to be higher for longer interest rates. It doesn't mean the Fed's not going to cut this year, and I certainly wouldn't put bets that they're going to hike based on this report, right? I would still put a very low probability that they hike at some point this year. But what you've got to do as a policymaker, if you're doing prudent policy making, even when we start to get a flurry of executive orders after January 20th, you want to look through price increases from tariffs, because on the other side of that, you get a hit to aggregate demand. When that comes through, the Fed could still be cutting, but later this year.
Yeah, tag team Seth Carpenter and Ellen Zentner is the way to go at Morgan Stanley. Ellen, this headline just out, and I usually don't do this, but it gets to what your meetings are going to be like at Morgan Stanley today. Traders shift full pricing of next Fed rate cut to October.
Wow.
That's wow. Okay, for you, that's wow.
To me, that's a wow. That's a wow. Because I have been, one of the scenarios out there is that the Fed's going to cut, and maybe they cut just as much as they're saying they might cut this year, but it comes later. later because they really have to see what policies come out of the administration and if they do hit demand later on.
Okay, I know you're not in speaking terms with Seth Carpenter, but the basic idea
yes,
here
we are.
is you have a twisted economics because you're Texas. You are hardwired.
I'm real.
The entrepreneur. No, I'm serious. You're hardwired the entrepreneurial nature of America. To you, Seth Carpenter, Richard Berner, Steve Roach, and everyone else in the game, do we underestimate the entrepreneurial spirit of, say, someone like Michael Dell?
I don't know if we underestimate the entrepreneurial spirit, but it was gangbusters during COVID when people were able to have a rethink and take advantage of excess income, low interest rates, and we saw a proliferation of business startups. And that's always productive, fraudy for the economy. It's just a positive all the way around. Now we're seeing productivity gains from the labor market having been so tight for so long that businesses sought efficiencies, and that's coming through now. That's not even AI yet. So American exceptionalism is real. It's very real.
Did you change your outlook? Will you change your outlook now that we are having a new administration come in and, a kind of more solid Republican Congress?
No.
No.
I think that pick your baseline. I mean, none of us know what's going to come out of the administration after January 20th. And so whatever baseline you have, it's going to be wrong.
Yep.
So you just have a lot of scenarios, and one of those scenarios will be sort of in the pocket of what we get.
What does it mean for the markets and for the stock market? I mean, it's away from your remit as chief economic strategist. I love this. Global head of thematic.
Sure.
Her job is to fix the Dallas Cowboys. What does it mean for the stock market? If you're sitting down with Lisa Shallett, what do you tell her?
Yeah, so Lisa and I are tied at the hip now, both on the Global Investment Committee at Morgan Stanley. Look, I wouldn't be investing in aggregate indexes here because policies are going to come fast and furious and they're going to affect certain pockets of the market. So you want to be in real assets, you want to be in energy, you want to be in commodities.
She's so Texas.
You want to be.
Well, she's got a game tonight.
I'll throw a yeehaw in there. Oh yes, and the horns are playing today.
So what are your plans for
Of course, I'm watching Landman.
Okay,
Yes.
well, what do you think? Sweeney's all
I'm
over
all into
this.
it.
I mean, is it an
Well, I
accurate
don't know a
picture?
lot about the patch. I'm probably learning just as much as everybody else. It's not a whole lot going on in West Texas.
But you're plus on oil and energy.
Oil,
from an American GDP
energy,
standpoint.
REITs, healthcare, financials, because it's going to be higher for longer interest rates. And so there are plenty of pockets of investment. Right now, we're very, very big on thematic investing, AI and defense, and specifically software. So there are pockets and there are things that we're excited about this year. And they you want to avoid things that are super impacted by the volatility around what policies could come out of the administration.
Ellen, thank you. Ellen Zenter with us with Morgan Stanley this morning. We're with you commercial free across the nation. Good morning on your commute. Good morning in a very early morning Pacific Coast time with all that's out there. Rob Carolyn will be with us with an update on quieter winds, but he models out a difficult Monday, Tuesday, and Wednesday as well. On YouTube, good morning as well. Subscribe to Bloomberg Podcast. Tell friends, Romans, enemies, whatever, about YouTube. We are thrilled with the growth there as well this morning. Right now, an update on these markets. Futures -50. Lisa Mateo.
Yeah, we want to kind of reset the table for you. So if you're just joining in, non-farm payrolls rose the most since March, increased 256,000 following a slight downward revision to the prior 2 months figures. Yeah, the unemployment rate fell 4.1%. Average hourly earnings rose 0.3% from November. So the market's really a difference in the past 13 minutes. NASDAQ futures down 1%, 220 points. Dow futures down 0.5%. 237 points, and S&P futures down 0.8% or 48 points. The 2-year yield 4.37%, up 10 basis points. The yield on the 10-year 4.78%, and that's up 8 basis points. That is your Bloomberg Business Flash. Paul and Tom.
Thanks so much, Lisa. Greatly appreciated. Again, good morning across America. We are so honored. On short notice, she came in today. Rebecca Patterson is with us with all of her work at Bridgewater over the years, and of course at Bessemer Trust as well. What does boring, quiet money do given the shock of a 256,000 statistic. Woe is me, doom and gloom America. Forget about it. What does quiet money do this year?
I think quiet money is already invested in equities, and as long as the consumer is holding in and they have jobs and the confidence to spend, and today's data says they do, then I think you can stay in equities. Now, given valuations, the upside's going to be a little more limited unless we keep getting positive surprises. The challenge, I think, is where do you go in the equity market, right? Small cap initially rallied on the Trump win, thinking deregulation, lower rates, it's going to be great, and they've given back all of those gains from right after the election because of rising yields. Small cap needs strong growth and lower yields, and right now they're not getting enough of both.
Lisa, thanks for doing that report. Sweeney was occupied. I saw him on the phone with his realtor.
Yeah.
I got a 30-year bond, 4.99%. Wow, Paul, does that change the landscape?
It does, Tom. And we got big movement on the front end of the curve. The 2 years up 10 basis points, 4.36% there. So, Rebecca, how do you think the Fed is going to digest this data that we received today? Because boy, the labor market looks pretty solid.
Yeah, I mean, I agree with Ellen, who was just on before me, that a January pause is baked, fully baked.
Okay, gotcha.
And now the market is discounting that the first, or next, I should say, cut, or the first cut this year doesn't come till October.
Yeah.
Who the heck knows, right? It's going to depend on all the policies that get rolled out. If the economy slows, if something cracks with the upper income consumer to hurt their confidence and cause them to pull back spending, this picture can change. If immigrants fall sharply, wage costs go up. That could, I mean, there's a lot of variables that could move us in either direction. So to me, an October cut doesn't seem crazy. I'm more interested right now in what's going on in the long end. Okay. The 10-year yield going up, pushing up mortgage rates, which is hurting the housing market, but also what's causing it, right? And we should talk about term premium.
Well, we're going to do that right now. We're going to talk about term premium because Dr. Patterson said, Tom, we're talking about term premium. Look, let me cut to the chase. You have been vetted as a Fed governor, a president, I don't know, somebody, carrying coffee at the Eccles building, whatever. You've been vetted, Rebecca Patterson. This live tweet says it all. The last cut was a mistake. It killed the Santa rally. Fold the last cut into your concern about rising yields.
Well, it's fascinating that as the Fed has cut 100 basis points, the 10-year yield has gone up more than 100 basis points. It's highly, highly unusual. What I'm worried about now is if the rise in yields is not a reflection of growth. I think today's move right now on the 10-year is stronger labor markets, so a higher Fed funds rate and strong growth. That's not a bad thing. But if the 10-year is going up because of uncertainty around policy, around Fed independence, around inflation, then you are going to see rising yields hurting stocks. And we've seen that pattern over history. That's what I'm worried about. Not the level of the yield, what's causing the rise in the yield.
Well, just to that point, Torsten Slok, just in a matter of minutes, was out with a little note here. Higher for longer continues to be the key theme in markets. Higher for longer in the front end because of the strong economy. Higher for longer in the long end because of a strong economy and fiscal worries, which goes to your point. So I guess that kind of goes to the question, when are higher interest rates a real problem for stocks?
Again, psychologically, maybe if we crack 5%, that could do some damage in a short-term basis. But I think the bigger deal is going to be, again, what's causing it. I'm watching things like economic surprise index. Okay. If growth surprises are disappointing, that's bad for term premium, i.e. term premium goes up in a bad way. If inflation expectations, we have data Monday, we have CPI coming up. If those things are moving in the wrong direction, and also earnings. Look what these CEOs and CFOs are saying. If they're highlighting fiscal worries, if they're highlighting rates, that could get reflected pretty quickly in term premium, also pushing up yields.
That's right where we wanted to go. I'm going to pick on Brian Moynihan. I could be James Dimon or, frankly, any other C-class officer out there. They've got the bright lights of inflation. I got a 256,000 jobs report, 4.1%. I'm sorry, that's a nominal GDP locked in. Do we underestimate the revenue growth that we're going to see a la Delta Airlines, 6% up in business class because Rebecca's flying around the country on Delta?
Well, Delta's great. I mean, if you have to pick one, that's the one to go domestically. Okay. That's my
Every
go-to.
seat's taken.
Yeah, it's true.
I'm on Air France and they're like fist fights.
Exactly.
They're all talking in French. I don't know what they're saying. But
So what are we doing here? I think with the equity markets, one of the concerns is boy, we really have to, if we're not going to get a rate cut until October, then boy, earnings really come front and center to support this market. Is that a risk issue for you?
Yeah, because again, there's a smaller and smaller chunk of the consumer that's holding everything up, right? The lower end consumer we know is hurting. So you need the upper middle class and the upper income consumer to continue spending. They can. They have the jobs, they have the income, they have wealth creation from housing and equities. Do they have the confidence and willingness to keep spending? And that can change quickly. Right now, it looks good.
But with a nominal GDP, I mean, where would you model out nominal GDP? I don't want you to do it because I know you're not doing it because you're on this wonderful garden leave. But if you had an Excel spreadsheet in front of you, you've got to model 4.8%, 5%. 5% plus nominal GDP, right?
Yeah. No, it's hard to get bearish on equities in that environment. Again, the question is, given valuations, where do you go? And the other thing, beyond just the consumer and the job market, think about tech, right? We know, forget about NVIDIA. The rest of the Mag 7 this year, next year are going to be spending $250 billion.
Yeah, the Microsoft $80 billion number last Friday.
Exactly. Right. And that's money that's going into the economy, also supporting this big nominal GDP number.
One of your family members calls in, Tom, lose the jobs report. Talk to her about the dollar. Dollar call from Rebecca Patterson.
I think we have another strong dollar year. The thing I'm focused on really is the Chinese renminbi. They intervened today to try to slow the depreciation. Yeah. They need to depreciate, but if they depreciate in a Trump administration, he's going to come right back at them. And so what do? They have to stimulate the consumer. That is their only way out. And so far, President Xi is not willing to give on that.
Can you model a vector of depreciation back to where they were with weakness pre-2005, I think it was? That's a big move.
That's a big move.
I'm trying to make some news
Look,
here.
in 2018, the renminbi fell 10% against the dollar during the trade war. Most economists and strategists I'm talking to think that is very likely to happen again. So here's your headline. The Chinese renminbi, if the PBOC, if the central bank lets it, is going to fall 10% or more this year. The question is, will they allow it? Are they going to avoid capital flight worries and prevent it? Or are they going to do it because they need it for exports, they need it for manufacturing?
Did you change your outlook at all, just real quickly, with this new administration coming in?
I want to see which policies get pushed forward first and the size. That matters so much to me. So I think we're all going to know a lot more probably by early February.
Thank you so much for coming in today. Rebecca Patterson with us with great perspective. It's just like, I got goosebumps, folks. I mean, this is what it's about. Claudia Sahm, Stephanie Roth before that. Then we go to Ellen Zentner. Ms. Patterson darkens the door with really important comments there on currency, on the dollar strength. They got a 30-year bond. Excuse me, Stephanie Roth. We go out to 4 digits in surveillance. 5.0003. Sounds like a bank account number. We're at 5% in the 30-year bond as well. And then we finished the hour strong. I mean, I literally got ducky bumps here. I can't stand it. Kristina Campmany joins us right now because she's going to synthesize all the 60,000 feet garbage and bring it down to yield and price and the comfort of what Paul Sweeney talks about was I just want to get my money back. Joining us from Invesco, Senior Portfolio Manager who doesn't describe her abilities, Kristina Campmany. Yields are up. Are your portfolios hurting? Because I believe price is down.
Prices are down. Look, we have been looking for a steeper curve. That's kind of been our thesis much of last year. Happening. And you take a step back. A month ago, we sat down post payrolls, and I think we talked about like what's a reasonable range for 10s when we have all of this uncertainty about policy and what comes through. And we talked about 425, 475, and I feel like throwing out 475. A month ago, when we were sitting at 420, people looked at you like you were crazy.
Yes, we did.
Here we are.
And here we are at 478. And in that time, you've had this massive reprice, and now you have the market chatter talking about 5 and 525 and 550. We've done a lot of work. So I think from here, to Ellen's point, like we're all kind of in this holding pattern of what kind of policies do we get, and are there risks to further higher yields? For sure, in a steeper curve. But I think the bar for the Fed to hike is very high. I think that there's a lot of value in the front end. Even with, we sold off even more today, I don't think we should be pricing in hikes.
Because again, the red headline across in the Bloomberg terminals that traders are now saying maybe the first rate cut won't come until October. Does that seem reasonable to you?
Look, I think part of that, when you strip it out, is people pricing in, or the market pricing in, trying to price in some probability of a hike, which we don't think is realistic. But I think it's right that the Fed is in this wait and see period, as is the market of, we know we're getting inauguration in a few weeks. What are the policies? And it's still the question that we've had since Election Day. What is the mix? What is the magnitude? What is the timing? What's the order?
Bring this back to the people listening on their commutes this morning, the people waking up on the West Coast in a shattered Los Angeles, and even to the pros. Forget about all the spread malarkey. Forget about, all the Frank Fabozzi stuff. Do I just buy a 2-year or a 6-month, 1-year CD and wait for the damage to clear?
Look, I think that you're starting to get to a point that there's some value at the curve to say, like, should I invest some money
Where's
in 10s?
your out the curve?
I think 10s is where you're safer. I think 30s you have more, what is our fiscal, what goes on. And we're going to have this headline roulette, but we've had that already. Like, to get rid of the debt ceiling, like, you're going to have noise there as a result. So real yields is another one. Like, you start to talk about long end real yields around 250, plus you're getting what inflation in fact realizes.
233.
As a personal investor, that probably makes sense of, can you put that in your portfolio in a mix with, you have some cash, you have some combo of risk assets.
How about credit risk here? How much credit risk are you taking in this market?
So we have been a bit more cautious on U.S. credit risk, probably to our own detriment within our own funds. And again, we run global funds. We have obviously within Invesco people that are more specifically just looking at credit. And again, I say to our own detriment because it's continued to perform exceptionally well. And you look at even the start of the year, like the corporate supply numbers this week are incredible.
Stunning. Why?
Why are
they getting out in front of the
I think
Trump
like part of it's probably some of that, and part of it is just always January seasonals of calendar of issuance coming out. But you look at that, and IG spreads are incredibly well behaved. And I think you have this sentiment in the market about positive U.S. and really negative the rest of the world. And so is there some risk that U.S. credit can in fact widen because the sentiment is so rock solid there that you could have a break? But
you can't talk individuals, but let's say one of the Mag 7 calls up and goes, Kristina, we need a cup of coffee. What do you tell them about the magnitude of debt issuance now? Yields are up. Instinctively, Paul, I'm like, don't issue. And yet, as Kristina mentions, it's been nuts.
Yeah.
Is that what we're going to see here?
It's been nuts, and I think the market is more sensitive and reactive to, I don't think on a corporate level there's a lot of concern of, you have strong balance sheets, you have a strong consumer, and then from nations, if you look at like debt levels, U.S. debt levels are things that you think the market should be like falling out of its chair for a number of years now as we push this. But the market gives a lot of, you've had this U.S. exceptionalism story for a decade, so it gives the U.S. a lot of grace.
Paul, get one more question in here. Folks, Anna Wong will join us with a market open at 9:30. She nailed this jobs report. Dr. Wong will join us from Bloomberg Economics. One more to Kristina Campmany.
The curve is steepening. What does that tell you?
I think I'm a little surprised of just today post this number that you've actually seen a further move in the front end. And I think to what we discussed, it's the market talking about like, will you really have hikes from the front end? I think from here, the curve can still push a bit steeper because you have all this uncertainty and questions about what is fiscal, what are debt, what are policies, what does inflation look like, all of these things that when the curve is in swaps, 2s, 10s is pushing 10 basis points, you don't have a lot of premium there. Like cash is 40. Historically, we've seen way steeper numbers. So I think that there's clear value in the front end here because I think that the bar for the Fed to hike is very high and that you can still see that's the bias still.
I have no idea what she just said to you, Paul.
I'm all in.
She starts slipping into Invesco talk. It's just like Rob.
It's bond people. They're bond people are different. Yeah.
They're just different.
Yep.
Okay. Kristina Campmany, thank you
They
so
want to
much.
get paid back is the thing.
They do. They want their money back.
Yes.
And Kristina, use your Bloomberg terminal today, please. Kristina Campmany with us with Invesco after this just outstanding hour of economics and market analysis. A special thanks to Claudia Sahm with her leadership in economics. Speaking of that, the laureate Paul Krugman, I will quiz him on international economics. That's how he won the Nobel Prize, and we'll go really to that with all the tariff discussions going on. Futures negative 52, 0.9%. NASDAQ down a stick, 1%. The VIX, I'm not out to 20, I'm out to 19.03. Paul cashing it in, a 2-year yield, Paul. What do you think?
Yeah, I mean, we right after the print, it was up at 11, 12 basis points. We're up 7 basis points, 4.34% on the 2-year. And the 10-year, just showing the steepening, as Kristina was talking about, 4.76. So, good 40, 45 basis point steepening.
Southern music today for President Carter. We played Allman Brothers earlier. 38 Special.
This is Bloomberg Surveillance with Tom Keene and Paul Sweeney.
I'm sorry, it's a boom economy, and that's what we're adjusting to.
Neither party seems to want to take on deficits at all.
With Lisa Mateo on markets.
Stocks are coming off another record high.
And Michael Barr with news.
Tensions between the U.S. and China have heated up even more.
The best in economics, finance, investment, and international relations. This is Bloomberg Surveillance on Bloomberg Radio.
Good morning, everyone. Tom Keene, Paul Sweeney, Michael Barr, Lisa Mateo. We say good morning to you. Our first great interview of the year, an extended conversation with Paul Krugman coming up. I will focus on the cause of his Nobel Prize. We will look at international economics and the Trump second administration with Professor Krugman, and we'll do that here just in a moment. Off of Jobs Day and the optimism of economic growth, just a superb statistic is well. The news flow extraordinary. Rob Carolyn joining us, I believe, at the end of this hour. Paul, I've got to go to your area, which is media, and I just saw a headline come across. ESPN, Fox, Warner Brothers Discovery Sports, streaming site Venue, they listened to Paul Sweeney to be discontinued.
Yeah.
That didn't work out.
They didn't even launch it yet. And so I don't know what's going on there. I think what's simply saying is, they were going to pool all their resources because these sports programming is pretty expensive. And let's get one big super sports site together where everybody can find everything. Because that's what consumers
ideally would like.
But we just
talked about this. Steelers, Ravens are on Amazon.
Amazon, yeah. So
they're overcome by events.
Well, I think what's happening, events are changing so quickly, Tom, that they're trying to adapt, and I don't think they really have a good handle on what they're doing there.
We'll have to see. Futures at negative 58. Let's do this. Let's get right to a Bloomberg Business Flash from the Interactive Broker Studios. Lisa Mateo.
Yeah, we've got futures deteriorating. This is after U.S. payrolls data rose the most since March. The jobless rate dropped to 4.1%. We'll start with NASDAQ futures. That's leading the losses down 1%. 236 points. We have Dow futures down 0.6%, 278 points, and S&P futures down 0.9%, or 55 points. The 2-year yield at 4.34%. That's up 7 basis points. The yield on the 10-year, 4.77%, and that's up 7 basis points. To currency, the Bloomberg Dollar Spot Index jumped up 0.4% right now. We have the Japanese yen down 0.2%. The euro is weaker. The British pound down about 0.6% at 122.31 against the dollar. To earnings, we'll take you there next. Shares of Walgreens on the rise, up 14%, stronger than expected revenue at its U.S. pharmacies. Then you have Delta topping estimates. Big demand for overseas travel up 7%. United Airlines up 7%. American up 6%. And finally, Constellation Brands. They make Modelo, Corona beer, down now 5%. Widen its comparable earnings per share forecast for the year. That is your Bloomberg Business Flash. Paul and Tom.
Lisa, thank you so much. Joining us now is the laureate, and there is a Ned Phelps Paul Krugman distinction in the year where Professor Krugman took the trophy, he was the sole winner. I can't tell you within modern economics, how special that is. I've been a fierce defender of his international economics, retiring from the New York Times column where he's been a lightning rod of debate, and we are honored that we can speak our international economics forward with Paul Krugman. Paul, thank you so much for joining Bloomberg this morning. If you had a cup of coffee in Mar-a-Lago with President-elect Trump this morning, how would you brief President Trump?
I would ask, what on earth do you think you're doing? It's we're looking at a U.S. economy that, this morning's jobs report was really good. Everything is kind of coming up roses. It's soft landing everywhere. And yet he's preparing, or claims he's preparing, to go on this trade war against everybody. And the question really is, why? What is it? Why do you want to do something so disruptive when you're inheriting an economy that is really looking pretty good?
I'm looking, Paul Krugman, it's something you taught with a piece of chalk at Princeton and at City College. The basic idea here is a tariff chart, which is the microeconomics and dynamics. We talked to Richard Clarida the other day about the deadweight loss of tariffs. For our listeners, the magnitude of tariffs, does it matter? Or is this just simply a deadweight loss to each American citizen?
Oh, no, the magnitude. I mean, one of the things that you learn from studying the economics of tariffs is that tariffs at low rates do very, very little harm. We had an average tariff of something like 2 to 3%. We do at the moment coming into this.
Right.
That, if you ask, how much difference would it make if we got that down to zero? The answer is basically invisible. But if you go from 5% to 25%, which is what Trump's talking about for everybody, and 60% for China, then it's, roughly speaking, we think that the losses go up roughly as the square of the tariff rate. So with Trump talking not about a modest increase in tariffs, not about tariffs on a few products, but across the board trade war, smooth hauling tariff levels, that starts to become a really, really big deal.
Paul, I've been and folks, the textbook on this is Krugman Opsfeld. It's all again. You throw Ken Rogoff in as well, but Krugman Opsfeld. There's some adult textbooks out there of what Krugman invented for us in international economics. Paul, I've always defended you by saying the Venn diagram of Krugman economics and John Taylor economics at Stanford is pretty tight. Can Kevin Hassett advise this president towards some form of tariff moderation or sanity?
Kevin Hassett has a history of basically saying whatever. I mean, he's been a loyalist and a courtier. I would be really shocked if he goes to, tariffs appears to be a real Trump obsession, and I'd be shocked if Hassett or actually anybody stood up to Trump and said, "Mr. President, you're thinking about this all wrong." I've been writing. For listeners, I'm retired from the Times, but not from life, and I'm writing almost every day on my Substack.
Your Substack? He needs to make a buck on this. That's what it is, Paul.
Well, it's free at the moment.
How do they still see your writing as you've exited the Times?
paulkrugman.substack.com.
There you go.
Or just Google Krugman Substack and you'll find it. And look, I'm free to. It's a newsletter / blog, and I'm in. And what I wrote the other day was we're seeing a continual dynamic where people who claim to be close to Trump but remain anonymous tell newspaper writers, "Hey, he's not really as crazy as he sounds," and then Trump immediately reacts with a Truth Social post saying, "Yes, I am." So it does look like we're really talking about in tariffs on a scale that we really have not seen. We're talking about a reversal of really 90 years of U.S. policy of trying to.
Where I wanted to go, Professor. I mean, I grew up on Global Wall Street, and many of our listeners and viewers as well, of internationalism being a fundamental business tenet. Now, that's taken a back seat here over the last 10 years. Is internationalism dead?
Well, probably in the form it was, yeah. I mean, a lot of this was U.S. hegemony, and we thought that a more prosperous, peaceful world was in our interest. What was good for the world was good for America, and we thought that freer trade was good for America, and we led the way. We built a world trading system kind of in U.S. In our own image. It's very rules-bound, legalistic. And it worked. We managed to get everybody's tariffs down. We got to a world of pretty close to free trade. We've been, in the last couple of decades, the European Union, which is not very united on many things, but is unified on trade policy, sort of co-managed the system with us. Now we've gotten much more nationalistic, and even Biden was pursuing, for I think pretty good reasons, some pretty seriously nationalistic policies, specifically on technology and China. But so the age of full-on more globalism is good. That's behind us. Yep. That really died about a decade ago. But there's a big difference between saying, okay, we're going to be much more selective about this and maybe even be protectionist here and there, and saying, Smoot-Hawley had the right idea, which is basically what Trump is saying.
Right. So, Professor, today's a big jobs day here on a global Wall Street, showing again the strength of the U.S. labor market. That calls into question another one of the president-elect's policies, which is about immigration and what to do with the migrants that are already here. From an economic perspective, how would you advise the president on thinking about immigration policy?
I mean, immigration has been one of the great strengths of the U.S. economy. Whatever else you may think about it, it's not actually a source of crime or any of the things that he says, but the immigration has been a tremendous safety valve. It's helped to contain inflation, and immigrants, particularly, if I might say, undocumented immigrants, they're not evenly spread across the U.S. economy. They're a really critical part of the labor force in some particular sectors. If you're worried about agriculture or meat packing or construction, those are all sectors where we have an aging. The native-born population is aging. The working age native-born population is shrinking because we've had low fertility for a really long time. So that without immigration, we would be we would be Japan. And from an economic point of view, this is a tremendous self-own.
Paul Krugman with us. We are thrilled that he's with us here with CUNY, CUNY's Stone Center on Social Economic Inequality, among others, and affiliated also with the LSE, I should say, and of course years at Princeton as well. I talked to him about his first paper once at Yale, which was on Star Trek. This is a few years ago.
Is that right? Okay.
Yeah, just after Ricardo. But the answer is the laureate Paul Krugman with us. Thank you for the huge response to Professor Krugman with us this morning. Paul, I've said this before, but I guess there can be a tour of duty when you win a second Nobel Prize. You deserve a second Nobel Prize for your persistent discussion of wages and monopsony in America. Folks, monopsony, the model, is a rubber plantation in Malaysia where the rubber plantation sets the price because they have power over all the farmers and the rubber trees and the manufacturing process. Professor Krugman, how is monopsony in America affecting our listeners and our viewers on YouTube?
Oh, gosh. I mean, in a way, what it's telling you, I mean, the main monopsony issue on wages is that it's okay to raise the minimum wage. I mean, this is where we really started to take it seriously when you first had the work by Card and Kruger, now replicated by many people, which says that local minimum wage increases don't actually reduce employment. Econ 101, unless I have to say, even in my own textbook, we do talk through how a minimum wage can reduce employment, but it doesn't actually seem to happen in the United States. Now, that's because minimum wages are low in the United States, and if you set the minimum wage at $40 an hour, even I would accept that would have some employment consequences. But so that's the main place where it hurts. Although if you are a small supplier of something trying to peddle your stuff on Amazon, the fact that you've got a giant Bezos-sized monopsonist certainly affects your business.
I mean, it's very interesting to see Paul Krugman and the conservatives listening. I'm going to frame this, Paul, as a liberality, in a way is a Lockean individualism of conservative theory in America. Should we be more like Germany, flat on their back? Should we be more like Sweden? Should we be more like France?
Well, I mean, ideally, we should be more like Denmark, which is a place that does strong welfare state, strong unions, and does it well. It's everybody's got. One of the things I've spent many years teaching a course, first at Princeton, then at CUNY, on economics of the welfare state, comparing different countries. And one of the things you learn, first of all, the United States has we have a much bigger welfare state than we like to imagine, but it's much smaller than what European countries have. But there's no country that does everything right. U.S. healthcare is a nightmare. U.S. retirement system is actually pretty good. France, it's exactly the opposite. So it's not a simple more government is good. I mean, I think conservatives always think that less government is good. Liberals, progressives never think that more government is automatically good. But there are certainly things where we should be doing more, and obviously that's on hold for the next few years. But there are lots. We can learn a lot from other countries. If that's one thing I would say as an international economist, the biggest problem with Americans is that we don't actually seem to believe the rest of the world exists, and we don't think that we can learn lessons from things that other countries do right.
Professor, most of the market participants that we speak to, particularly over the last several months, and they see a data point like today's non-farm payrolls, and they feel like the Fed has engineered a pretty solid, soft landing. What concerns you? What worries you about this U.S. economy right here?
I think the U.S. economy, as of right now, is in very good shape.
Okay.
I am worried. I've been around a while, and the whole AI furor and all of the money being thrown at that technology gives me definite 1999 vibes. The sense that we may be having, even if the technology does do a lot of good stuff, and there's some indications that it will, the valuations look awfully high, and you can very easily imagine a kind of 2000, 2001 type. But the biggest concerns are policy. I mean, if you actually believe that Trump is going to do what he promised in the campaign with these massive tariffs, mass deportations, and let's not forget, taking away a lot of the Federal Reserve's independence, it's not at all hard to see us gratuitously. I mean, we're in good shape right now, but we could very easily have a gratuitous outbreak of stagflation in America, and it will be entirely coming top down from the White House.
Very quickly here, Professor Krugman. Paul, we got to do this or Krugman won't come back. The Substack this morning, the real threat of fake numbers. Paul Krugman, are you suggesting the president and his administration will cook the books?
I think that's a very high possibility. If you believe what I'm saying about inflation is actually going to go up substantially. And do you really imagine that Trump will just sit there and not say these are fake numbers, it's fake news, and put pressure on the Bureau of Labor Statistics to produce better numbers? Yeah. I mean, we've seen populist regimes do that all over the world. Why imagine that it won't happen here? And I know that people who've had long careers at the Bureau of Labor Statistics are really worried about this. So I was just saying, flag this. This is something to watch.
Paul, generous of your time. Thank you so much again. Paul Krugman, A New Life. He got it from Adam Tooze. Yeah. Substack.
Yep.
Maybe we should do a Substack.
Maybe we should do that.
Paul Krugman, thank you so much. And the Nobel laureate of Princeton, always in CUNY as well. Let's get right to it on Jobs Day. Futures negative 43. Our news in New York City, Michael Barr.
Thank you very much, Tom, Paul, Lisa. Firefighters are making some progress on controlling the deadly blazes that have scorched Los Angeles as the toll of destruction rises, with entire neighborhoods reduced to ash. 4 out of the 5 major fires roaring across the region showed some signs of being contained. The Kenneth fire that broke out and expanded rapidly on Thursday is now about 35% in check. Los Angeles Mayor Karen Bass said the National Guard has been called in to help secure evacuation zones.
There's going to be zero tolerance for anybody that would be, I don't even know how to say this, but that would dare to enter houses or loot property.
At least 10 people have died from the wildfires. President-elect Trump will be sentenced today in his New York hush money conviction. The Supreme Court refused to step in a 5-4 ruling. Bloomberg's Zach Cohen has more from Washington.
Trump took some solace in the fact that it affords the point that, look, he can continue to appeal this decision, especially given the fact the Supreme Court in July had this landmark presidential immunity case that the president-elect's legal team feels pretty good about the fact of getting that ruling overturned on appeal.
Bloomberg's Zach Cohen in Washington. The Supreme Court hears TikTok's appeal to the law that would force its parent company, ByteDance, to either sell the video platform sharing app or shut it down in the U.S. The law is scheduled to go into effect January 19th. ByteDance is a Chinese company, and the government claims TikTok's current arrangement threatens national security. TikTok's team stresses its right to free speech. Global news 24 hours a day and whenever you want it with Bloomberg News Now. I'm Michael Barr. This is Bloomberg. Tom, Paul, Lisa.
Thanks so much, Michael. Paul, I loved your question to Professor Krugman on immigration. That still seems to be, that was a focal point of the election.
Yep.
That's a focal point after the election.
Yeah, it'll be interesting to see, what policies, how aggressive the policy is, because economists have been trying to, quantify the economic impact of immigration, positive and negative. Right. But a lot of folks say, hey, they entered the workforce, they pay their taxes, and that's been a contributor to the labor market and to the economy.
One thing Paul Krugman said early in the discussion, we already have tariffs. They're 2-3%,
right.
Whatever. But we have tariffs. The question is the magnitude of the potential tariff lift. That was a little bit wonkish. Thank you for staying with that monopsony and on charts that are difficult. From New York City, Bloomberg surveillance.
Markets, headlines, and breaking news 24 hours a day at Bloomberg.com, Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
And this futures report sponsored by IBKR with Interactive Brokers Forecast Trader. You can trade your views on key political, economic, and climate indicators. Visit IBKR.com/forecast and get started today. All right, we've got futures falling. This is after a blowout jobs report. It actually pushed traders to shift their expectations for the Federal Reserve's next interest rate cut to the second half of the year. So we have NASDAQ futures down 0.9%, 200 points. Dow futures down 0.4%, 189 points. S&P futures down 0.7%, or 44 points. Heading over to the years, a jobs report also pushed yields higher across the curve. We have the 2-year yield 4.33%, up 7 basis points. The 10-year rose to the highest since 2023. It's now 4.75%, up 6 basis points. And the 30-year rose above 5% for the first time in more than a year. Right now, it's at 4.97%, up about 4 basis points. The Bloomberg Dollar Spot Index up 0.3%. Want to get to some deal-making news. Constellation Energy confirmed it's going to buy Calpine for $16.4 billion in a cash and stocks deal. And that is Constellation Energy shares up about 14%. And finally, DHL expanding its reach into the retail return business. That's because it acquired return service provider Inmar Supply Chain Solutions. For on-demand news 24 hours a day, subscribe to Bloomberg News Now, wherever you get your podcasts. I'm Lisa Mateo. That is a Bloomberg Business Flash. Paul and Tom.
Hey, Lisa, thanks so much. Paul Sweeney way out front on this. Here's the game. There's the U.S. oil price and the global oil price, Brent. Brent's always higher than the American oil price. So going down, I look at the American price, and moving up, I look at the global oil price because it makes me for theater. I mean, all we care about is ratings here. And Paul, I got $80 a barrel and Brent crude up 13% from the first week of December.
Yeah, I mean, and I'm looking at the Bloomberg News reporting. Oil jumped to its highest in 3 months, Tom, as traders digested a report that Indian oil refiners are bracing for new U.S. sanctions that would hit flows from Russia. So
it's an international thing.
Geopolitics coming back into the story here. So, you work with Alex Steele, and you can't help it.
You can't help but do it. I mean, it's amazing. I mean, Cam Dawson and I are just like in awe of this as well. Joining us now on the equity market reaction to all we've heard this morning from Professor Krugman, from Professor Clarida, Richard Clarida a couple days ago as well, Cam Dawson to distill it. Cam, it's you, me, and Randall over at Barron's. I'm opening up the Barron's tomorrow morning. Are we all in on this equity market given a booming jobs report?
It is that question of, is good news or is good news bad news? We think at the end of the day, strong jobs are overall good for the equity market, but we have to take a hit to the valuation first to digest these higher yields if we continue to see this labor market hold in better than expected. We went into the year trading at 22 times forward, which doesn't leave a lot of wiggle room to digest the fact that 10-year yields are now pushing closer to 4.7, 4.8%. But at the end of the day, a strong jobs market does support earnings growth. So the worst outcome for us would be that you'd have a weaker jobs market. Maybe the Fed does come in and cut rates, but it would mean that earnings estimates are too high. That's far worse for risk assets.
Cam, we have rates higher yet again here. Again, the 10-year Treasury at 4.75. The 30-year actually touched 5% here today. How much of a headwind are higher for longer rates for the U.S. stock market?
It's certainly a headwind mostly for very high valuation stocks, but also for small cap stocks. This is where there has been a notion of survive to 2025. As long as we can get through these high yields in 24, Fed's going to cut rates and bail us out. And you saw that in small cap trading. Even though estimates for earnings were getting cut materially over the course of 2024, down 25%, continuously cutting those estimates, what happened is valuation multiples expanded simply on this notion that you'd get bailed out from lower interest rates. So if lower interest rates do not materialize, and we don't think that they will, it means that those interest rate sensitive parts of the market will continue to struggle and suggest that that hope for broadening out to lower cap sizes may not materialize.
So what's that mean? Buy Mag 7? I got 40 seconds here and we'll come back with Cam Dawson. Is it load the boat on Apple, Cam?
It's not necessarily Mag 7. We do think that there are very expensive pockets of Mag 7. We do think that you can stay very disciplined on valuation. Our dividend strategy trades at just 14 times forward. There are some Mag 7 in there. But we think that there still is opportunity in quality value. We don't think it's deep value because there's a lot of value traps in there, but quality value continues to provide opportunities that gives you that valuation cushion.
Stay with us. Cam Dawson, New Edge, with us this morning here in the equity markets. We say good morning to all of you. To get the markets open, futures at negative 38. The word is vacillated.
Vacillate?
They vacillated as well.
I'll go with that.
Hear the pause? That's a pre-cheer for the Buffalo Bills.
Yeah, exactly.
That's what that is. I'm kidding. We need to get the markets open, folks. We do this. The VIX, we had a 19 print, now 18.86 as well. The yield space higher. Dow futures at negative 173 with the market opening in individual securities. Our Lisa Mateo.
You got it, and we'll start with the S&P 500 right now, up about 0.1%, down about 0.4%, 36 points at 5,881. The Dow down 0.3%, 166 points, 42,432, and the Nasdaq little change, down about 10 points at 19,312. All right, we get over to the 2-year yield, 4.33%. That's up about 6 basis points. The yield on the 10-year, 4.75%. That's up 6 basis points. Have to point out oil right now set for its best run since July. Brent crude hits $80 a barrel for the first time since October. It's up more than 4%. WTI crude $77 a barrel. And we have spot gold at $2,690 an ounce, with the Bloomberg Dollar Spot Index up 0.3%. Back to you.
Thanks so much, Lisa. Appreciate it. Paul, one more question to Cam Dawson, please.
Cam, this is looks like it's going to be an earnings a market that needs earnings really to come through, because the market's saying, hey, we're not going to get a Fed price cut until maybe October. That's what the market's discounting today. Are earnings estimates a risk for this market?
I do think they are, because earnings estimates do bake in an expansion to record margins, as well as an acceleration in top line growth, which in a potentially decelerating nominal GDP growth environment, both of those things are a bit of a challenge. We also see less upside to GDP growth. And thinking about oil prices being down on a year-over-year basis for the last 2 years effectively have been a huge boom for this consumer. So one of our wild cards is that if oil prices do start to rise on a year basis, pulls in consumer spending, that could be a challenge for this economy, where upside to household consumption has been the key driver of overall upside.
Cam, thank you. Cam Dawson with New Edge Wealth as well. One of the traditions of surveillance is we're very interested in people that get it wrong. But frankly, we're more interested in people that get it right. And it's time for a 2-minute victory lap with the gentle lady from Chicago. Anna Wong joins us now, head of Bloomberg Economics, with just a prescient call on a superb jobs report. What did you see a week ago, Dr. Wong, that got you over 200,000 non-farm payrolls?
Hi, Tom. So we see from our real-time data, we have we keep track of some real-time payrolls data, that there was a across-the-board strength in hiring in December that's quite unseasonably strong, and so we stuck with that call.
So Anna, just give us a sense of kind of the print we saw today. What did that tell you when you dig underneath the layers there about the U.S. labor market?
Well, you know, the thing that really surprised us in this report is the strength even in the household survey, because we actually had expected some weakness there. What we saw instead is a very strong private sector hiring in the household survey, even though the government sector indeed is shedding jobs as we predicted. So I think this is a genuine sign that things are stabilizing.
Are we going to see higher inflation in the CPI? You got to get something wrong, Anna Wong. In 5 days, are we going to see a higher inflation report? Or are you going to nail that as well?
I do think that the risk is for an upside for inflation, and particularly the wildfires from LA. I mean, they're talking about the potentially one of the largest insurance loss in many, many years. And those homes that are burned down are huge mansions, which require a lot of timber, a lot of construction materials. And I think this would boost commodity prices at a time where we're already facing threats of tariffs on timber from Canada.
It's a team effort. Anna Wong, congratulations to your team at Bloomberg Economics, absolutely nailing this morning's jobs report. And already filtering in there is the rebuild of a Los Angeles still under huge risk. Rob Carolyn, I believe, will be with us in the vicinity of 15 minutes. He's been very busy. We'll try to get him back here as well this morning. You know, I'm looking at the Dow negative 236, looking at SPX negative 40. I mean, I thought it'd actually be worse, frankly.
Yeah, I think it's because, again, the WIRP function, Tom, suggesting that a rate cut maybe not till October is kind of what the market says. That's not what was in.
That's a lot of people working over the weekend.
Yep,
I think
figuring that out.
That says. Please stay with us. This is Bloomberg Surveillance from New York City on economics, finance, investment, and your international relations. Good morning.
Markets, headlines, and breaking news 24 hours a day at Bloomberg.com, Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
From the Bloomberg Interactive Broker Studio, I'm Lisa Mateo. Stocks really getting beat up. This is after a big upside surprise for the final U.S. jobs report of 2024. 256,000 new jobs added in December. The unemployment rate falling unexpectedly to 4.1%. We'll start with the NASDAQ, down more than 1%, 264 points. The Dow down 0.8%, 348 points. And the S&P 500 down 1%, 59 points. Yields on the rise. We had the two-year yield 4.33%. That's up 6 basis points. The yield on the 10-year 4.74%, and that's up 5 basis points. Have to go to oil because we have Brent crude up more than 4%, $80 a barrel. WTI crude $77 a barrel, and the Bloomberg Dollar Spot Index up about 0.3%. Few stocks to watch right now. We're keeping an eye on Walgreens. Their shares up 19% after strong earnings, and then same for Delta. Delta up 10%, and that's giving a lift to United and American Airlines. Finally, Constellation Energy. They're up about 20% after it agreed to buy Calpine for $16.4 billion. That is your Bloomberg Business Flash. Paul and Tom.
Lisa, thanks so much. What a sterling set of guests today's. And now to have the shining light of Tufts University on. Allison Boxer joins us this morning, and she has the toughest conference call known to mankind. She's got to get on with that jobs report and what we see with yields and explain to portfolio managers at PIMCO why it's priced down and yield up. Sprouting her first gray hair, Allison Boxer joins us this morning. How tough is that conference call going to be, Allison? What are you going to tell portfolio managers in fixed income about higher yields off of a booming jobs report?
Yeah, well, good morning. Thanks for having me. Certainly a strong jobs report, really, however you look at it, whether you look at cyclical hiring, whether you look at the unemployment rate, really just strong across the board. But I think the good news as we're thinking about bond markets, is that markets had sort of already come into this year having readjusted their Fed expectations. And we think in many ways, this report actually makes things easier for the Fed. They're in a good place. They can stay on hold and they can wait for more data, given still elevated uncertainty about what the outlook is for this year.
So, Allison, just looking at the WERP function on the Bloomberg terminal, it suggests that traders are maybe pushing out a rate cut all the way to October. Does that seem reasonable to you?
Yeah, I think it's reasonable to think that the Fed's going to be on pause for now. I think this makes their lives easier in many ways. They had already signaled just 50 basis points of cuts this year. Markets had not only repriced to that already, but even expecting even less cuts than that this year. And I think the Fed is now well positioned to just stay on pause, wait for more data, wait to see where inflation comes in, and they can return to focusing on the inflation side of their mandate instead of being worried, as they were earlier last year, about potential weakness in the labor market.
So let's step back and think about the consumer here. I mean, this has to bode well for the U.S. consumer here. The consumer has a job if he or she wants it. The wages are rising at a rate higher than inflation. How do you guys think about the consumer this year?
Yeah, absolutely. I mean, I think what we saw in the jobs report is, really consistent with the fact that we saw a solid consumer again last year. You think about an economy that was growing 2 to 3% in the second half of last year. That's certainly consistent with this strong labor market report. And I think, solid. It looks like it was a solid holiday season. U.S. consumer continues to fare well, and I think continues to be a bright spot not only in the U.S. economy, but really, more broadly globally as you look at how other economies are faring as well.
Allison, there's a PIMCO heritage back to Gross and Ilarion of looking at the bigger picture, the consultant of Bernanke, Clarida, and others. Where are you within the company discussion of productivity? The idea that all of this growth we're seeing is some form of new technology / productivity.
Yeah, I think, again, going back to the comparison of the U.S. economy versus how other economies are faring, taking that step back, the U.S. has really been exceptional in terms of growth and exceptional in terms of how much stronger productivity has been. It's really, the strong productivity has really been a U.S. story. We're not seeing it elsewhere in the world. And so we think it's a combination of the fact that you saw businesses having to do more with less during the pandemic period. You saw tech investment in the U.S., in the post-pandemic period and more recently around AI themes, all coming together to, again, help, sort of the U.S. overall really be sort of the standout economy, not just over the last few months, but really over the last few years.
So what's next on the agenda for you and thinking about this economy? Because is it going to be the inflation data coming up? What are you looking for there?
Yeah, I think with the labor market looking like it's quite strong, we can now sort of turn our focus to the other side of the Fed's mandate, which is inflation. I think there's a lot more uncertainty about the inflation outlook. We've heard Fed officials starting to talk about reflecting, uncertainty around trade policy and other factors and how that could cause some noise in the inflation data over the coming months. We still think that inflation's going to be in the 2-point-something range this year. So, not quite at Fed target, but still with a 2 handle. But I certainly think there's more uncertainty and more room for volatility around inflation this year. And again, I think that's really consistent with the Fed, sort of going on pause, waiting for more data.
Allison, thank you so much. Allison Boxer with PIMCO this morning, picking up the pieces off the jobs report. Down negative 300. I mean, NASDAQ down 1.1%.
Yeah.
I'm still looking at Delta's earnings 3 hours ago.
Yeah, I know, exactly. But
are we going to get more of those? What's JP Morgan going to say next week?
I bet you they're going to be pretty positive. I mean, I think that's
And that's what we had last quarter. It was like, OMG, and
I bet you they're teeing up a big 2025. If I'm Jamie Dimon. He sees everything. He sees corporate lending, investment banking, trading. JP Morgan touches basically everybody.
So we don't do 14%, we do 13.2%,
right.
It's still double-digit earnings growth?
Yep.
I don't know.
Yeah,
it's
we'll
interesting.
See.
The VIX 18.87. With our news in New York City, Michael Barr.
Thank you very much, Tom. Paul, Lisa. President-elect Donald Trump is due to be sentenced any moment now by the New York judge who oversaw his hush money case. Trump is appearing virtually at his hearing going on right now, and Judge Juan Merchan is expected to simply end the case with a conviction on Trump's record without imposing a sentence or jail time. The Supreme Court last night rejected Trump's last-minute attempt to stave off today's proceedings, but allowed Trump to appeal. Officials say the 2 biggest wildfires that is ravaging the Los Angeles area this week have burned at least 10,000 homes, buildings, and other structures. Authorities urge more people to heed evacuation orders after a new blaze ignited. The fast-moving Kenneth fire started in the late afternoon in the San Fernando Valley near the West Hills neighborhood and has moved into Ventura County. This woman is stunned by the gravity of the destruction.
It's apocalyptic. It's like someone's dropped a bomb. There's cars burnt out. There's ash everywhere.
Los Angeles Mayor Karen Bass called on residents to stay united.
We will reject those who seek, in this emergency, when lives are at stake and lives have been lost, we will reject those who seek to divide us and seek to misinform.
The fires in the Los Angeles area have now forced President Biden and the vice president to cancel trips overseas. Kamala Harris canceled her trip to Singapore, Bahrain, and Germany due to start Monday. to remain in the U.S. and support the federal response in California. The U.S. Supreme Court will hear arguments on the future of TikTok in the U.S., with a federal law set to ban the app if it isn't sold by its Chinese parent company. The case pits national security against free speech, with the Biden administration defending the measure and TikTok creators arguing it infringes on their First Amendment rights. Global news 24 hours a day and whenever you want it with Bloomberg News Now. I'm Michael Barr, and this is Bloomberg. Tom, Paul, and now John.
Rob Carolyn is scheduled to be with us in the 11 o'clock hour, Paul. Okay. He's got such a busy morning.
Yep.
We're pulling that back, and actually that's good. My major lesson from Rob Carolyn today was to get out to Monday, Tuesday, Wednesday. I believe he suggested new forceful winds earlier into next week.
Yeah, you just hope that in the interim that they can get a handle on this, get some control over it.
They are, but how much control?
Exactly.
Good point.
Yep.
Thanks to Jim Glassman yesterday for being with us. He lives right near, around the vicinity of the Rose Bowl.
Yep.
And, it was quite emotional talking to him.
Yep.
It's really, we all have our anecdotal stories about this, but it is an ongoing story. Michael Barr will be leading our coverage on that, and, of course, Rob Carolyn again in the 11 o'clock hour. You mentioned earlier the new bigger number has exploded from 50 billion out to 150 billion.
Yeah. And
where's it going to be a week from now?
Exactly right. And, the insured number is only a fraction of that, Tom. So the insurance will cover just a fraction of that because, and that's can be the real challenge for a lot of people out there.
It'll be interesting to see. Please stay with us. From New York City on YouTube, subscribe to Bloomberg Podcasts. This is Bloomberg Surveillance.
You're listening to Bloomberg Surveillance with Tom Keene and Paul Sweeney on Bloomberg Radio.
Good morning, everyone. Paul Sweeney and Tom Keene here. We finish up with the heavyweight. 23 years ago, my first interview at Bloomberg was with June Grosso.
Whoa.
I had to be medicated. I went over to the Subway Inn
and
had 3 beverages of my choice. I was so nervous. Anytime she walks in the studio, I start shaking. She's here now. Good morning, 92.9 in Boston, where her parchment is from the Duck, just near the Duck Pond, Wellesley College. And then she wandered up to Harvard to get a parchment in law, and June Grosso joins us here. The lineup, this is from Stanford: Richard Nixon, Aaron Burr, Spiro Agnew, Bill Clinton, and others. Why is this legal action against Donald Trump different than, say, someone like Aaron Burr?
Because in this case, he's being treated differently. He's not being treated like every other defendant because the Supreme Court basically last July had this controversial ruling where they said that presidents have immunity, a large degree of immunity from prosecution for official acts while they're in office. And Trump used that in the New York case to put off the case again and again, to put off the sentencing. And he's continued to try to use it until the other day, Wednesday.
Did his Supreme Court 6-3, I believe it was 5-4, did they let their president down?
Well, Amy Coney Barrett let her president down, if you're going to put it that way, because of the 3 appointees by Trump, Justice Neil Gorsuch and Justice Brett Kavanaugh voted with the two most conservative members of the court to stop the sentencing. And it was the Chief Justice and Justice Amy Coney Barrett joining with the liberals who said, no, there's no reason to stop the sentencing, basically. And I think part of that is because Judge Juan Merchan was very smart in the way he handled this. He said that ahead of time, I'm not going to give him any sentence at all, no punishment at all. And the Supreme Court used that to say, there's really no reason to go forward with this, not to go forward with this, because he has no punishment
Paul,
coming.
Justice Coney Barrett blew the decision because she was focused on Notre Dame football. That's what it was.
That could be. That
Continue.
could be.
What is actually happening with President Trump right now in the sentencing?
So I don't know exactly what part they're at, but when they came in, apparently he's been shaking his head through the prosecution. The prosecutor has been talking about the overwhelming evidence in the case, that Trump has disdain for the law. After that, the defense will say a few words, the judge will say a few words, and he'll ask Donald Trump if he wants to speak before he's sentenced. And I think that's where this could go off the rails, because it should be a very short sentencing. What is there really left to say? But it's going to, if he starts to talk, it might be much longer.
So what is the sentence? There's
no sentence. There's no sentence. The only thing is the stigma. He is now going to walk out of that courtroom a convicted felon.
Right.
This man who yesterday was sitting at Jimmy Carter's funeral with past presidents, today is in a courtroom being sentenced.
June, just one final. We're running out of time here. I can go with June Grasso.
Yeah, I could come in earlier next time.
I had to pay her to interview me in 2003.
I'm still waiting for that, by the way, Tom.
Okay. Checks in the mail. June, the president, how does this affect him 5 years from now, 10 years from now?
Well, I mean, it probably
Can
won't
he serve
affect
jury
him.
duty?
Well, he can't vote. As of today, he can't vote in Florida. That's one thing.
He can't vote in Florida.
He can't vote in Florida. But perhaps, we'll see the governor of Florida somehow giving him dispensation from that. But I mean, it matters if you're a convicted felon, if you're an average person and you go for a job. Donald Trump is not going for a job. So
don't be a stranger. It's 10 o'clock. This is the earliest I've seen you in here in like a decade.
This is not fair, John Tucker.
It's amazing.
Yep. For you, anytime.
June Grasso, thank you so much.
Okay.
Seriously, folks, this is an ongoing process right now. Paul and Alex will have all of this coming up here, and we'll see if the president-elect will speak as well. Major shout-out, our global technical director, Kenneth Fellio. Eric, thank you so much for yeoman's duties. Who's our producer? Cy?
Yeah.
Cy, thank you so much.
Great run.
So, Cy, I'm only talking to him because he's got the Bills this weekend. Good morning, everyone.